What's going on? How was your day today? Hopefully you stayed out of too much trouble. It's a Monday. Things are a little, so far so good, Patrick. All right. Out with a small win. Good morning, Edwin. Edward, sorry. Get my glasses on here. Good morning, Paula. All right. Any questions from today? Any questions from the information we've completed teaching the checklist and the journaling? And I know we have one email question, but is there anything that we need to go over real quick? I'm going to kind of summarize everything and put it all together right here for you so that you understand what you as a trader should be doing every day. You've got your checklist now. You know how to journal. What are you going to do with this information, with your 20 trades, with your elimination of errors? How are you going to improve your understanding? Because we can give it to you and you're going to start working with it, but how do we make this your information and not someone else's that you're trying to copy? Like, how are we going to make your understanding of what's happening on the chart something that you utilize and you make progress with, right? The experience is the important part, but you need to ask yourself questions. And with this little bit here, hopefully this is going to help you do that, right? So every morning you should have in front of you your checklist. Like, print it up, physically have it in front of you. I put this together. I built this so that you could print out, this page, and we also have it in Spanish there, and cut one piece of paper into 4 different trades, right? And I think one of the mistakes made is people don't actually print this. It's not sitting in front of you right now, and it needs to be sitting in front of you so that you can just with a pen you write in your symbol, right? You have to actually do this. You put in the date. Sorry about my writing. That's the best I can do with a mouse, right? And then what event did you identify, right? First thing, you circle this, you circle the position. Did you anticipate or confirm? What was your initial stop? Maybe it was max loss per trade down here. Was it long or short? Did you win or lose? All that can be at the end. If it was an event stop, would you consider the size small, medium, or large? How do you know how big to go with that? Like, if your stop is max loss per trade, then it's actually large, right? Because that's the most you should ever lose, right? Now, when you take your first add, did you add on your first red bar ignore? Did you add on your first pullback? Did it get that far? Did you take your 3 push profit or your new high profit, whichever ones show up, right? And then how did you trail out, right? And you might have a couple of these. You might have first been pivot stop, and then at the end, big bar. Did you have a win or loss? And then, you put in your profit and loss. But if you have a bunch of these, you've done the work. And what this does is you need to look at this piece of paper and say, this is replacing you. All your thinking, all the what if this and what if that. If it doesn't show up on here, it's not something you have to do, right? Do you understand the purpose of this thing? This replaces all of your thoughts, right? You have to get rid of everything that you're thinking about. Your job is just to look at the screen and go, do I see any of these things? And how many trials is it going to take before all the thinking goes away, right? How many trials before you stop, trying to know what's going to happen, right? So that's the first part. I put this together to just make it simple for you. I mean, you should get this by now, but just this grid kind of, you know, it should be obvious to you if you just read this a few times. If you're in this location, predominantly you're looking for these kind of signals. If you're in this location, predominantly you're looking for these kind of signals. And what kind of stop would you use? And what size should you be using, right? Same down here, right? I should be looking for bearish signals if I'm in double minus. I shouldn't be looking to buy here. There are exceptions. What are those exceptions? What's the exception? When do you go against this? When do you go against what this says here? Not exactly, Ali. Any of these things. It's the same answer for all of them. Yeah, Paula's got it there. Someone in the Spanish room, right? When you have violence that goes against your there's a certain amount of violence, maybe it's 2 elephant bars in size with room left to go, that you can say, you know what, this is that, 1 or 2 out of 10 times where I can go against the position, right? You can go against your position when the signals are just crystal clear and you go, you know what, I got to give it a shot. And you still got to trail it out and you still got to use your checklist and see how far it goes, right? You will, as you stay with the group, you're going to learn at which points we start to say, all right, this is closer to an end of a move, and things are different now. So this is a good thing, just so you go, I'm in this position, I only look at this, I only do this kind of stop, I only have this kind of size. The only time that I'm going to use large size, right, is when I'm using max loss per trade. And the only time I'm going to use max loss per trade is here and here. So if you have your max loss per trade is a particular size, and that's large, well, how much is small and medium, right? What percentage of a max loss per trade would be a small or a medium-sized trade? If your max loss per trade is $150, maybe medium is 80 and small is 60, right? But you need to have that amount, and it just keeps you out of trouble, right? And in some cases, it gives you room to add without, within the space of your event stop. That's not going to bring you to a max loss per trade, right? So you may be getting in at a $60 risk, but if your ad is somewhere inside your entry bar, it might bring your risk to $90 or $120, and your stop out could be later close to a large size stop, and that can happen. That should happen once in a while. It shouldn't happen all the time, but it should happen once in a while. So know your positions, right? Know your size. Now you've got your 20 trade sheet, right? You're going to identify your biggest errors, right? I went through this, this is the real important part. Which one happens most frequently, right? Maybe you find out that you have more losers on your anticipatory entries, and you say, okay, the error that I'm going to eliminate is no more anticipatory entries. My next 20 trades, not a single one, and see if that improves your results. And at the end, you'll be able to see in the P&L column, are the results better, right? So does that make sense? You guys need to learn how to identify, like, what is it that's showing up over and over again? Because otherwise you don't know, right? This trade went crazy, the next trade went crazy, some things weren't working, and you did nothing to make sure you don't do it again, right? And then sometimes it's not your fault. It's the stock that was stupid, right? But you need to identify when you're the one being stupid, right? You're the one that's not following the checklist, right? Because again, and you have to believe this. You have to take on the belief, and you have to figure out how many times you need to prove this to yourself that the process works better than you do. And that's why the people that are making two journals, one for what they actually did and one for what they should have done, how many times do you have to prove to yourself that the process works better than you do? I mean, this is why this is hard. This is why, Jan can show it to you over a weekend, show you the whole entire thing, and you won't be able to do it, right? You won't be able to do it because some part of you fights this process. And until you've done it the millionth time, and I have to say, there's almost no way to get there without being driven to the brink of insanity, because your ego does have to quit at some point. And if it's not going to quit, it's not, in the end, you're always going to lose to the checklist. And whenever you can get out of the way and defer to the plan you have, and even if the plan turns into just limiting yourself to a particular position and only playing that position, or only certain kind of entries or whatever, and just mastering that, or only playing the first Velez buy or sell setup that is a 50% pullback trigger at a moving average or something like that. If you can't limit yourself and just master one thing, it gets really hard, right? So Ali's saying, I find that when the market opens mixed, that's when most of my whipsaw trades happen. Is it good to avoid trading in weaker mixed markets? Well, okay. So I think, Ali, part of it right now is you need to gain the experience. So I can't tell you to not trade. I actually think you need to sit through the losses. And then a few months from now, when earnings come and things start moving the way they're supposed to, it's going to feel totally different. From my experience on days like this in the summer, I'm very cautious in the morning with entries. I see other people jumping in, and I'm not jumping in. Especially right now. But that's just from my experience. I'm going to, yeah, that's the event, but I just go, no, it's not. When 1 in 10 is igniting out of the thing and looking the way I want it to, I pause and wait for something to give more confirmation. And sometimes I end up waiting 45 minutes or an hour before I take an entry now. Or I'm playing, if I take that initial entry, which I do often, I'm usually digging out for the first 30 minutes before I get back on the green side. It can happen like that, so, it can take, my initial entry will immediately go into the red, but I don't get in so big that I can't still add on that pullback. And then I'm actually looking to get out break even. And I have a lot of trades come out that way, where I added very close to where the stop was, but it didn't break the pivot, and it reversed right there, and it gave me a chance to put in an ad that allowed me to reduce size and wait longer. Those things can happen, right? So yeah, it is. It's a lot of waiting, and if you see at the open that everything's trapped, what you're looking for is days where things are either really wide or really narrow, and they give you the most beautiful setups that you absolutely have to play. But if you look and across the board everything's trapped in a zone, just recognize that. Now you can still play things or not play things. That's your choice, but make sure that you understand by the end of the day that if the results were not good, you made some choices to play when things are just trapped, And I think this morning a lot of things were just kind of trapped, Oliver, and the tricky thing is when you're watching Oliver, he will always find something and get you going. But yeah, he did have a time where he was only a retracement trader. and I remember him talking about this, saying it was just like everybody said, you have to wait through the morning, right? And I think he saw those earnings mornings and stuff like that, and things would fly, and he's like, wait a minute, no, this thing's on fire. I just need to get in some and play that first move, and then I'll also play the first retracement. But if you're looking now, that's also, here's a guy who, as a NASDAQ market maker, is trading one stock, right? He's trading one stock. We may have 10 of them in front of us, and something is always moving, right? Something is always gonna, AMD had a nice topping tail today, below the 200, had a nice move. Why not take it, right? People were taking that. So you can still find them during the summer, right? You can still find these nice moves. So that's why I'm saying don't make it so that you don't trade. Just make sure that it's something that you identified with the correct position and so forth. Got to take all of those. So you can be hesitant, but at the same time, you have to say that if it matches your checklist perfectly, you have to take it, right? You have to take it. It's not, maybe I feel like it today. I don't like how this. No, you guys have to take it, right? If it matches up, you have to take an entry, right? And you have to like, that's what the purpose of the checklist is, right? It's replacing you. It's not even like, maybe today I don't like how things are moving, blah, blah. No, it's like if you see the event in the location and it's just clean, you've got to do it, right? Now, I say that and, understand that the expectations are going to be different, but that doesn't mean that you get to make a decision. You're just going to be the witness that it just doesn't go as far. You need to sit through and just witness that these things don't go to the moon on days like this, right? And if you don't have the time of doing that, it's not going to benefit you. You need to be losing right now, right? Taking losing trades. Go, I identified this. I mean, you might even make a note here saying, something, you might even write over here something about, low expectations today because, market was flat. I mean, how many times do you, if you write that in there, that's really great. And you took it anyway, and this one didn't follow through, or it did follow through. But if you start doing that and going summertime market, summertime market, summertime market, oh, this one, beautiful Fab Fours everywhere at the open, and everything's following through. I mean, imagine what that'll mean to you, right? If you make that little note of like what you're seeing at the open during the first hour, right? You guys get what I'm saying about that? Does that make sense? Like, just because it's summertime doesn't mean you're not going to have trend days. You definitely are. And you got to be there for them. And they're still going to start out with maybe a monster gap, or maybe a, who knows, a Fed announcement or something, right? So I am going to make this easier for you by proposing that you compare apples to apples. And what I mean by that is make your folders based on the position, right? I know there are many ways you can do it, but if you have a whole bunch of folders, like, for example, if we made it all in events, all bull elephant bars, and you're comparing a bull elephant bar taken from this position and a bull elephant bar taken at this position, the chart's going to look totally different, isn't it? It's just what can happen from there. And I say this because I want you to be able to ask yourself a question and go into a folder like this and go, all right, here's position minus. And I've filled it with, let's say, for example, 50 trades taken from that position. And I can just open this folder and start scrolling through, and I can write down a question like, how many times does the 200 hold for a whale complete? And you just go down chart by chart by chart and list out how many times you get a whale complete, right? What would that mean to you if you had done your own, based on your own trades? And it doesn't matter about what your result was, but did this actually hold and follow through? How many times did it fail, right? Wouldn't that mean something to you? Wouldn't that mean like, I'm not going to worry about it? Like, my results show that when I enter a trade congruent with position, and also just how many times do I go against position, right? Go in there. How many times did I go against position, and was the result favorable? Ask a question. Like, are you going to take the time to question yourself about this stuff? How many times at a triple plus location does a weak event fail, meaning that it gets stopped out, only to hold somewhere above 50% of the gap and then make a new high? So here's your Fab 4. Here's your double plus location here. And then I want you to rate the initial event, right? Out of 10, how many does it get, right? If it's 6 or below, how often does it fail first, meaning that you get a stop out? And then somewhere above 50% gap fill, does it take off and keep going, right? If it's a 6 or below. If it's a 7 to 10, how often does it not stop and it just continues, And if you have, but you need to take the time to fill up these folders, right? How long is that going to take, right? Might take 6 months. That's why a number of you have been here for a number of months, right? You're trying to fill up these folders, and I've given you suggestions. These are ones that I use, right? Dual zones, igniting off the 200. I have a folder for lessons that Oliver's made, all this kind of stuff, trap zone plays, plays that I haven't gone through and categorized yet, right? And I'm going to make it simple for you how you label a journal that you've made. Make the first thing that you put when you name it. So this isn't for your folder, but this is for the actual screenshot that you're saving. Put the position first, so double minus, then put the name of the stock, right? And then put the date, so right? Do something like that, right? So you can know what date, you can know what stock, but you can know what position that you've taken this from, right? And then it'll be very easy to look at your uncategorized files and just sort them and dump all the double minuses into the double minus position, right? All that kind of stuff. Do you see what I'm doing there? Like, this makes it so that you can easily flip through a whole bunch of charts taken from the same position and just supercharge your understanding of what's going on. Like, the people that do this kind of a study, and definitely there are other ways you can do this. You can put all the bottoming tails in one file and all that kind of stuff if you want to, but I'm just going to say that I don't know that you're going to master positions if you don't do this. Like, for me, it took the longest time to realize this, that if I don't get all the things that take off from the same position into the same file, I'm not going to understand positions correctly, right? I'm not going to be able to look at trades that I took from a position and just get it right. So I hope this is helpful for you guys. You can sort however you want to, but I want to make your study of these things, when you have a question, dual zones is like, here's your 200, here's your 20 MA, and then here's your price action way up here, So you've got one zone here, like the distance from the 20 to the 200 right here. So here's one distance, right, from here to here, and here's the other zone from here to where you are now. And those plays tend to snap back and fall, right? So that could be a late day play, for example. Like things just got way above. Sometimes you get a play at the open where, like, here's the 200, here's the 20, and this is already gapped. And there's just so much room to fall to the 200 that, like, bullish event would just be likely to fail. Like it just, because the 200 sort of has this bungee cord effect where once you get up too far, it just snaps you right back down, right? So, when you're going from wide, the probability is a reversion back to narrow, right? So, and that when you have dual zones, it kind of defies this position stuff. Like I could have 200 here and a rising 20 here, making a very wide trap zone, right? Very wide zone. And we're calling this a single plus because it opens right here. But in reality, it's going to probably go like that, right? When it's really wide, right? And so that's a thing to recognize, and so something that looked really nice just immediately and sharply falls, right? Does that make sense, Gurmeet? So make sure you have a thing for that, I think. So that's it, right? You're going to be able to track your errors. You're going to be able to study your positions, and that's going to make you a better trader, right? Like we're here to give you this structure that you can add now. That this is a step. You see how, like, when you're still trying to figure out how to push the buttons and all that kind of stuff, and you're still trying to understand what a trend is, and you're reading those first, you're not ready for this, right? This is another layer. Oliver is explaining this stuff all day long, but like you need to be able to put this together, and you're not going to be able to do that without a structure. You have to create a structure, and it needs to be there because you're not going to do it, right? Not many people have the ability to discipline themselves to come up with a template and a structure to become a process trader, right? And why is that? It's because everything inside of you wants this trade to win, wants this one to win. But a process trader doesn't care about this one. It's over 20 trades, right? It's such a hard shift to make. Everything inside you wants this one to be special. Just let this one stop if it's not going. Fire it if it's not working. The next one might be the one that follows through, right? So, yeah, thanks, Jan. So this is why we keep going over it over and over again, right? It takes repetition just to keep reminding yourself, right? We have to keep fighting our own, inclinations to do stuff, right? So I'm gonna start off here. We got another 30 minutes before I'm gonna flip it over to Jan. So I'm gonna start with some of the journals from last week. And here we have Niaz. And let's see, confirmation entry. Second 2-minute bar with 2 lots right here. Addition of one more lot at the formation of the hidden green bar ignored. Okay, so this is being called a hidden green bar ignored. I think this is an actual green bar ignored right when it breaks the low. This looks a little early to me. So let's see. Yes, I have a question for you. Is this the first green bar ignored? Aha. All right. I'm going to say this one is, right? And let's see. Also, I'd like to know you're trying to add on the pullback. Okay. All right. So the I think there is part of the problem, if you know what I'm saying. But was this a max loss per trade stop? Because I can't tell here. Looks like, I think it looks like max loss per trade was your stop. Okay, good. So that should be way up here somewhere. I'm noticing bits of a 200, which probably was up here, which makes me go, is this wide or narrow for a fabulous 4? Because I get the feeling the 200 is way up here somewhere. So it might be a little wide. MLPT was $75. I got that. Okay, so the price is over here. So if this is your entry at 62.90 or so, 62.86, and your risk is $75, and you've got 2 lots, that means you've got about 37 cents before you hit your max loss, right? So if that's the case, then your stop is like right here. That is not a max loss stop. You understand what I'm saying? Max loss should be way up here. You can't even do a 1 lot entry and have a max loss per trade stop, right? Like max loss per trade should be above the 200 in this case. And in this case, you are going to have to make an event stop here, is what I'm saying, because of the size of the play. You see where I'm getting? See what I'm getting at there? You probably could put an event stop right here, and that's all that you can afford if you're going to play this. Not only that, if you take this ad here, it's going to move your max loss down in here, and you're not really going to be able to sit through a pullback. So you can't add at all on this play. You just can't add on it. You're here, and then let's see. So you started with event stop in addition to a third lot, and I turned into max loss per trade. Oh, I see. Okay, so you started here with an event, which really should be up there, which you still, I don't think, can afford because of this price. But the event stop would be, the beginning of this, not the entry bar here. Because where you entered, this is not even a complete bar. You see that? Really, the event stop has to be the high of, the initial move, right? So I really want you to be careful with that. The event stop has to be here, and I don't think you could afford it. So you can't afford this ad. My question is this. Now, once a green bar ignored happens, are we still doing 3 pushes? Everybody, yes or no? Once we have a green bar ignored, are we still a 3 push profit take? Yeah, we can do 2 once we have our green bar ignored, right? Because that is our pause, right? That's our first pullback in a way. So I would propose that this is 2 pushes, right? I would think that down here there needs to be a first profit take. I also look at this as like this is a first push in a way, right? You got in here. There's push 1. Here's push 2. It really needed a profit take right here, and I think that would have had a calming effect, right? If you get a profit take right there. And then, regardless of whether you add or not, now you could add here and make it almost like a separate trade with that one lot having a stop here, right? One lot would have an event stop, and then this other one would still remain up here. That's possible. You can do it that way. And then you'd be able to take as many as 2 right here if you wanted to. I think you would, you would have the choice after that profit take to bring your stop here. You could do that. I probably would not, because I would look at this as one fluid move down. To me, that's one fluid move down. And then you got to sit through. Here's your stop up here. You got to sit through this, and you'd probably add somewhere in here. Maybe technically, here's the takeout of green. You could add right there. You could add right there. Any of those kind of things. You'd still have your stop up here, and eventually you would get. This was a really strong move up, and then it went sideways. It didn't stop out, and this violent move down, I think, your ad would give you the ability to take more profits into profitable territory, right? And later on, this still didn't really stop out. I would say that you could call this your whale complete, though. And if you wanted to bring your stop down to a solid, a big bar stop, I think that wouldn't be wrong if you wanted to do that. And you could stop out the rest here. Because we're in that whale complete. This is the place where it should have continued, and now we're starting to get failures, and we're getting, elimination of red. We're getting multiple eliminations of red, so, there are definitely different ways that this could stop out in terms of stop adjust, because the 2 color rule is also going on here. So, I noticed, right, you closed here, took all the lots off right there, and I think that was a P&L move, right? And can you see that by missing this profit take, though, it changed the whole psychology of the trade? Right, now you had to think, all the stops that you had put in place, and everything changed suddenly, right? So Ali's asking, strong move up, should we not add? Well, you can add, but here's the thing. Missing a profit take is a massive problem, right? Understand that once you've got your 3 pushes and you just missed it, and now you want to add more after a strong pullback, that's a clear-cut way to have a lot of big losses, right? So, when I'm going to say, look, if this gets wide, and remember, the 200 is way up in the stratosphere on this play. Sorry. You see how this is way up here somewhere? Is this far, right? If you're not going to take profits here, where are you going to take them? Get what I'm saying? Most of this play, I think this is your ad, and you got to get 2 off here, because this is just getting kind of ridiculous. And I would actually say, if you got 1, 2, you got, 2 off down here, I would adjust the stop and just say, I think this is done. Because I think this massive bar should not be wiped out. I think that's a reasonable stop adjust, right, from here down to here, especially when you get into wide territory. When this gets wide, it's time to start, stop adjusting. You've got to, you've done an ad, you've got a nice profit take for 2/3 of it, and I just see that this is an amount that is too much to give back, right? that's not sitting through a pullback. That's a 180 that can go in the other direction. I'm a little more skittish these days. So there are times where you go, well, we got this. I need to give this room to pull back so it can make a new low, right? And that's correct for this one, right? Like, it actually did make a secondary move after what looked like a power trend to the upside, right? The stop still held, right? And I just don't want to go and get in, like, if you miss this and then you just get in bigger up here after a powerful reverse, like, look at what this reversed. This reversed a really fat, ugly red bar. I mean, I actually would have expected this to take off and go back to the two. I just think the odds changed. Am I wrong here, Jan? Am I looking at this backwards? I think a stop adjust, like here, when we get wide, when we get into, I call this double space. Here's your 200, right? There's a gap here, and there's a gap here. And I just think once we reverse this, yeah, it has a second chance to go down, but I don't know how much of this I want to get back once this is profitable and this takes this out. Once this gets above here, I don't see new lows as being possible for the day, right? You're going to get a secondary move somewhere, but I don't see new lows as possible. So you can add somewhere in this mess when it takes out green, and I'd be getting out here, but I don't expect new lows once we've erased this solid red bar. And that's just me being a technical trader. Now, you still have your checklist to deal with, though. Once you've taken profits and you've had an ad and we're getting like kind of this double space far here, like, now I think it is acceptable to use a stop adjust that keeps this from turning into a big losing trade. That's all I'm saying, right? Because you don't know what's going to happen next. I think you really want to have patience when you're moving from narrow to wide, right? You want to have patience. You want to use the most patient stop adjusts when you're moving from narrow to wide. And you want to use tighter stop adjusts when you're starting from wide and you're getting really wide, like here's the 20, here's the 200. When you get way down there, I think it's okay to use the tighter stop adjusts, right? I don't know. Tony, Jan, would you agree with that, or am I just is that too much Tyler interfering with the play? Jan's going to stay silent on this one. He means that it's too much Tyler interfering with the play. But I mean, that's something you're going to learn through experience, because like all this extra stuff, right? All these extra things is now just trying to like force a win out of a trap zone. Don't we have a trap zone? Like, here's the 200. Here's the prior day's close. We have this massive kind of 180 thing, and now everything in here is just undecided, right? So I know I'm talking a lot about this, Niaz, but it's because I just think after we get boom, we get this V here, we're just in a giant trap zone, and a secondary play down is good, and then I don't think any of this stuff is important here. Right? It's just a ping pong match. To me, I don't, here's a violent move down, and what do? We start going long. I don't know, it's not my thing. I'm not good at this middle of the day trap zone stuff. That's not my thing. But I don't like wide plays to suddenly turn into big losses. So that's the point I'm getting at. Right. Yeah. And believe me, we have all been there. Every single one of us has tried to make sense out of, the tea leaves here. But there's nothing particularly simple about this setup. So that's why I'm pointing that out. Now this has a lot more clarity, doesn't it? Right? So here's Patrick's trade, $60 loss per trade. Right? Nice entry up here, one lot entry, and wrote it all the way out to here. And so the question, if I only had one lot, is it wrong to take profit here? Took profit because the daily range is about $1.20, and we're, $1.44 from the previous day's close. So here's the thing: we don't know, Patrick, why, how far it's going to go. This could be the day that it goes 3 times its average true range, right? So I do like the ad, and if you want to put its own stop loss to just stay inside, if losing this right here and losing that is still within your max loss per trade, it's totally fine, and you must do it. You must do it. It's not should I have. It's you have to do it. If that takes you over $60, then no, you have to leave it alone. So does that answer that, Patrick? Okay, good. Now, if you're going to enter with only one lot, guys, what did I say? How did I say you're going to exit that trade? What is the first lot you enter? How are you going to exit that? You're going to trail it out, right? And which one did this stock provide for us? What kind of trend did this provide for us? Let's do this. Let's start from the beginning. Okay, we get in right here. Here's our initial stop. And we're moving up. We get to here. When can we start to stop adjust? We get to here. This bar closes. When might we do a stop adjust? We get to here. Do we have any stop adjust by the time we get to here? I mean, here's 3 pushes. What might we do? Where should it go? Break even to the RBI. Let's say if you're just one lot and you haven't, and there's no profit take, where can you adjust the stop? I see break even is good here. What else could you do? Yeah, I like that, Andrew. I like the stop to color. Stop to color. Why is it? It's like if we're up here and we get a 50% pullback, I think it shouldn't take out this color. I think you want to give it time. But a 50% pullback would still, right? You'd be healthy here. It is a lot to give back, but I think break even is just barely something that could get taken out, right? I want to give it the benefit of just a little more space. But now I'm, risking $20 instead of $60. But this kind of power, when you get a move from here to here without much red at all, I think there's a good chance that we have a power trend or we're going to keep going. And we just don't know. And the problem is we don't handle indecision very well. Now, when we get a red bar ignored here, and then we get 2 pushes beyond that, I think there's, right? You just look at your checklist there. Can you move stop to color here? Ask the question of this. Once we get up here, is it ridiculous to give this all the way back to break even? Like, is that just insane? I think so. So I think a stop adjuster right here is good, right? I don't think there's any test of the ATMA yet that really says that that's a good test, but I think a stop adjuster right here is good. So here's one red bar ignored. There was another down here, but it was nowhere near these moving averages, so I don't really care about that. Now here's a second red bar ignored, And now we are close to the 8MA, and I think, and now here's another kind of little red bar ignored. I really think the 8MA has come into play. Is there any argument for bar by bar here? Yes or no? No, and why not? Right. No separation. Exactly. Now, this is kind of annoying how this happens, right? It breaks on this bar, but at what point does this kind of become 2 bars? Like, the break is here, and I would say, like, this is 1 bar length, and I think as we get a little below that, right where I drew this line, I think below that line we go, all right, this bar itself is becoming 2 bars, and I just get out, right? That is a break of the 8MA, right? So at this point, that's the size of about 1 bar. Below that, we get into anywhere below that is a good place to just say, all right, this power trend is over, right? So, the interesting thing is, Patrick, is that much different? No. But what you gain from learning how to sit through this is much more important. Now, you could add after the second RBI, but like, what are you doing? You're just adding to your risk. I'm telling you, if you get into the practice of adding on the second and third RBIs, you're just going to end up stopping your entire trade for much less gains, right? How often is adding on the second and third RBI? Because this is actually the third RBI, right? This is the third RBI. Are you saying to add here? Because even this one, it's like, okay, we're up in the stratosphere now. We had our first one. Now you're going to let this come back down here. You're going to lose even bigger because now you have this lot that you added just losing this whole time, making this trade into a loser that was a big win, right? Like, we don't want to add far. We want to add near here, right? We get that when we're in a trend. We want the ads here and here. We don't want the ads here and here, right? And we don't, adding there is just saying, I know that this is going higher. You don't know that, right? The RBI ad is this one, the first power move. Or, let's say it pulls back, right? And we get a power move here, and then a little RBI off the moving average. That one I would accept, right? That one I think is better, right? So maybe you get this one, and maybe you get that one. Those have better odds, right? Because you're already out of the pullback. The moving average is holding. You have a lot of help there, right? I just don't like this one that's in the stratosphere. What's wrong with, like, is there something wrong with being able to say, I got in here and I got out there? Like, don't you feel like a rock star if you did that? Like, you tell your grandkids about that one, right? I got in here, I got it. People don't even believe it's possible to sit through that. That's what Oliver says all the time. He's like, people don't even think it's possible for you to enter here and get out there. So why worry about, well, I added here and I added up here and I added up here and come on. I want to be able to say, I piled in at the beginning and I closed at the top, right? If you got in 2 lots here, right? I took one off here and I got out there. Why throw all this extra stuff in there and forget all that, right? Most of the time, all these ads in here, you'll stop those out on a pullback and it'll still make a new high, right? So that this is the one you want. That's the one you want at the beginning after the first push, right? So does that make sense? We're not going to go for the one that's up here, right? So I hope that helps, right? All right, moving on. So thanks for that one. Patrick's got another one here, right? Better entry would have been the green bar. Okay, reversal here. I think, let's see. So you shorted here, right? Right, 44.71. Yeah, down here. So you waited for the elephant bar, and I think that's a good idea. And you had to stop above that event. I also think that's a good idea. Why? This is starting to get some distance. Right? Like, I don't think, if it gets up here at this point, really what you have is something that's going to keep going. But you'll learn that later. I like that you just got in. That's good stuff. Put that here. And again, an ad was missed. I think $60 is really small, Patrick. I think that's really small. I'd give yourself more space. I think you added two. I think you went in 2 lots. So I think this is 2 lots. Yeah, 60 is really rough. That's really hard to do. You know, frankly though, I think you take your 2 lots here and then you let this go. And I like the profit takedown here. I think that's really good. You got your pushes. I don't think you need to add right here. That's not a green bar ignored. That's just a neutral bar. I mean, you can call it a hidden green bar ignored, but it's just really neutral to me, right? And I do like that, like you have this red push here. It's just, where is this starting? Just, I don't know. There's nothing wrong with it. I mean, you can take it. You can take it there. There's just something about this bar to me that is not exciting. It's not the same as, boom, here's your solid red bar. Here's a little blip inside that bar, and then here's continuation. I think that's the hidden red bar ignored. Sorry, green bar ignored. What is a bar that looks like this? What do we name that? It's not a doji. It's just a neutral bar. Yeah. It's just like total indecision. That's total indecision. This was right next to power, an immediate just like wipeout failure and continuation. This to me doesn't seem, I don't want to debate that too much because then Jan will chime in and say no, that's it's just like, to me though, this it's just moving consecutively into some little like, I don't know. It's just it's not like a failure to go up. This is more like a, I don't know. Right? That one to me is just like a, I don't know, and then it continues. So here we are down here. I think that's a great profit take. I think we do have our pullback. I think that's a great ad. Now we have a new low. You have to take that profit. You never miss that one, right? Because what happens? Once this is erased, now our whale is complete, right? And this is where Patrick starts adding and adding and then stopping out, right? But you can't miss the new low, right? Like, anybody here ski or snowboard or something like that? All right. So you're slaloming down the hill, right? Here's the FIS trail. And at the bottom, what happens over here is like the lodge, right? Here's the lodge. And we start, and then, right, we kind of barely stroll into the lodge. Right now, you're going to notice with some trades, right, you can take your skis off and start walking, right? And when it starts looking like that, like there's a reason why, like, here you jump off a cliff, you do some things. They don't put the lodge right here where you smash right into it. At the bottom, right? It kind of, the grade gets flatter and flatter, and eventually you're kind of like walking, and here's the building, right? Right. And you need to recognize when, like, here's the cliff that you jump off. Here's your slalom, right? Here's the first little bump, and then like you're walking with your skis to the lodge. When you start walking with your skis to the lodge, it's time, no more adding. You're done, right? It's time to go get a burger somewhere, right? So like, here's the mountain, here's the momentum, and then now we're walking. And if you're on that, like if you're on your snowboard and you have to like do that awkward jump where you're like flipping forward, like it's not time to add anymore. The move's done. Everybody went to lunch, right? Lunch is early today. So and that's the hardest thing to recognize, is like everything's getting narrower and narrower, right? Everything's getting narrow. And that's where you get into the most trouble. You need to recognize when the magic's gone. Yeah, it's a fun one, right? I just came up with that. I'm like, we'll use that one, right? This is like the first jump on your snowboard right here, and then there's the second one, and you're getting really tired, and you're like, all right, I'm taking this thing off. I'm going to walk to the lodge, right? 1 hour. Okay, so it's a good time for me to quit. I didn't get very far, but this is why your whale complete, when things are getting distance, when you're getting time instead of depth, don't let a whale complete be lost. This thing's over, right? That's your whale complete. Now we're getting more of this than we are of that, and it's time to be done. Right? So where does it stop out then is the next question. Well, this is where you've lost your whale complete. And then here's a time stop if you need to do that as well, right? So, but I don't think you keep adding there, right? Once you get your whale complete, there are no more adds. And that's all I'm going to say about that. So there you go, Patrick. I am going to hand this over now to Jan. I hope you guys can make a good study out of all this now. Hopefully Jan's projection is working today. All right, there it is.
Now it is.
I checked it before. All right, good stuff. Take care, guys.
Great stuff, Tyler. Thank you. Yes, I did check my projection before because it's becoming a routine to do that. It's just totally unreliable. So. Okay, am I audible? Is the sound? How's the sound, guys? Sound check, please. Perfect. Okay, good to be here again. We have a lot of work to do. I have like 12, 13 journals or so to go over. So I want to see if I can cover them all today. One thing though that strikes me is I do not see any journals coming in by traders marking them as this was my biggest loss from 20 trades. So something tells me that at least some of you are not really working on that. Is that just my idea, or do you guys think that it's not really worth it to spend your time on? Just asking. Just asking. Ah, okay. Edward is penitent here. Okay. Well, you still have time to fix that up, Edward, because there's a couple of more sessions coming. So I'll be glad to see your journal come in. Cynthia says my charts are Forex. Oh, I don't care. You can trade whatever you want. You can trade lean hogs if you prefer that, or you can trade tulip bulbs or stocks or Forex. It's all the same. So the same price action principles that Oliver teaches, they work on every market. So please send in some of your trades, some of your charts, and especially one where you think that you made a big loss and you would like to see us look at that if there was something you could do better there. Okay? So I won't go too much into that. I'll just leave it at this. But I would recommend that you think this over again. Some of you and the traders who I'm talking to, they know. Study those big losses and try to get them out of the way, and we are here to help you do so. Okay. All right. That said and done, let's move into some journals here. And we start with a journal by Andrew. Hi, Andrew. Andrew trading WFC. That is, that's Wells Fargo, right? Bank. Okay. Andrew starts by marking the Fab 4 here, which is great because that means that we know what he saw here, how he was looking at the chart. MA200 here, congestion zone. So now we have like a reference point in the chart at the open. Okay. So let's see what he identified here. He says he identified a bottoming tail bar. I think, Andrew, what you mean is you identified a topping tail bar, right? Because this tail here, I hope you're talking about this bar here. And if so, then that has the tail on the top. Okay. All right. Position double minus. Double minus meaning not really close to the Fab 4, but quite a distance. I think that's correct. Double minus, perfect. Entering by confirmation, meaning he enters below the bar here. Okay? Below the bar, and his stop is event. So his stop is here at 45.05 to be exact. So he says, I have an 11-cent risk. I'm shorting 3 lots. So his risk is then $33 here. $33 risk. Max loss per trade, $90. So perfect. Perfect. He can afford to be stopped out here. So he's shorting here. And there we go. Right? Then it bounces right back up. And he says, I wanted to add when it shows power to the downside. So basically, he says, I did not add because of this bar. Okay, I can sort of understand that. However, let me ask you a question, Andrew. What do you expect after this bar here? This bar here, this bottoming tail bar, this big tail here, this bottoming tail. What is the next bar that you expect when you see that? What is the most likely thing to happen? Ali says up. Yes, follow through, right? This is what we expect. This bar, if this is a reversal bar, then it should actually be confirmed by a move to the upside. Is that what's happening here? Not at all, right? There is no confirmation, actually, no follow through to the upside. So, as a matter of fact, what we do get is a small bar here, and it's broken there below. So, what that tells you is that this is a fake bar here. You should not really take this serious. Remember, you are trading here in a double minus area, right? So you are trading with the position meaning to the downside here. So this is just a temporary bounce. It cannot get any follow through. It has a small bar here, and when this low is taken out, you can still add here. Do you understand this? It's a failure to follow through to the upside. Okay, so there's no need really to be scared of that tail, actually. Okay, no big deal though. So you have 3 lots in here, and then you cover 1 lot here. How many pushes is that? How many pushes is that, Andrew? Because why did you cover here? Why did you cover here? You say it's 2 pushes. Well, you're probably cutting this bar in 2 then. You're saying, okay, I have 1 push, I have 2 pushes. Wow, okay. This is a big bar. And what do we do with big bars? When you have a big bar like this in your favor, what do? Preferably. I'll get the answer. You don't take profits. This is a reason to not take profits. It's actually a reason to count on the follow through and take profits in the next bar. So unless you already have an order pending here, it could be that you threw an order here and it dropped quickly and it took out the order. Okay, that can happen. But if you don't have an order here waiting and you see this bar grow this size, you should actually be cheering. Hallelujah, because this bar is likely to produce follow-through. So you don't want to take profits. It's exactly the other way around, okay? Where you do want to take profits is on the follow-through, which is actually here, okay? Just imagine if you do this all the time, over 1,000 trades, every time you make a couple of pennies or 10 cents more, even 20 cents more, and you add all of that up, that will be thousands of dollars that you gain that way. You see that? Right. So, so first profit take should actually be where the third one is. Now, you did take profits here on 2, so I can see that now you take one more on the follow through to the previous profit take. That makes sense to me, okay? So it would have been better though if you took your first one here and then you take another one in the next bar. That would have been perfect, all right? How much is this anyway? Because here you're entering roughly at 95, I think, right? Oh, yeah, 94. Your first profit take here is at 80, probably. Not sure, something like 80. So maybe so. Actually, you're settling here for 15 cents. 15 cents. You can't even buy a cup of coffee for that. Okay, this is really. You see, you're really covering way too quickly. You are really you're really too easy here on what you deserve. You deserve more of a result from any trade like this. Okay, so don't take profits. Take at least 20 cents for a stock like this in the $50 area. 20 to 25 cents is really the minimum. Okay, 25 cents is probably even the minimum. 15 cents is just because the problem is what's going to happen is that your profits will be so low if you start taking profits so quickly. And look how much you actually left on the table there, right? I mean, you stayed in the trade with some with at least one lot here. I get it, but still you could have made a lot more profits here if you had just followed the chart here and listened to what the candles were trying to tell you. So if you keep taking profits so quickly, then your profits will always be small, you see. However, whenever you get stopped out, you get the full hit, you take the full hit, right? So your profits will not be able to make up for your losses, ultimately. This is the danger. So you have to work on taking profits later, or that is not too late, but at the right time. And this is definitely too early. Okay, so number 3 here. Number 4, what is number 4? 4. Oh, right. Oh, you're moving the stop from here to here. I see it. Okay. Yes, okay. It would actually be better, I think, to move the stop here, because this little bar here, that I consider a GBI. Now it's my turn, so now I can say what I think. To me, this is a GBI, right? Because it's a pause. And I don't care about the color or the body of this bar. It's just a tiny little bar. And what is really important here is that it's a pause. So in a way, it's just a GBI, and that means that you could use a collar stop here if you wanted to, especially after this drop. However, what else do we see here? What is this here? What is this move? This is definitely a power trend. Okay, to me, it's a power trend. So when I get to 4 here, it's obvious that it's about time to start thinking about a moving average here. And but you're taking the 5 MA here, I think. That is very tight. It seems more natural to use the 8 MA here. Which one is that? I think this is your 8 MA, right? This one here. Yeah, okay. All right, if you use the 8 MA, then you get stopped out here because this bar just pokes through it, and then the next bar takes out the high. So your 2-bar stop will take you out of the trade there. All right? That happens. That happens, but that's okay. Look, there wasn't much more to be made here anyway. Okay, so I think good trading overall. I like the entry a lot. This is perfect. It's also a small risk entry, which makes it even better. You could actually have jammed this up. You have 3 lots short here, which is $33, but you have a max loss per trade of 90. So you could have taken 5 lots short here, even, right? Still risking $55 here, with a huge potential. It would have made your life easier because you would probably start scaling out here a bit, some of those lots, okay? Profit take too early. Well, we went over that. And then MA trailing here because this is power trending here, okay? All right. Let's move on to the next one. Next one is by Patrick on Uber. Patrick on Uber. And Patrick is also here using a $60 max loss per trade. You're welcome, Andrew. $60 max loss per trade on Uber. And let's see. This is the first bar of the day, I assume. So that means that the Fab4, it's always good to draw that in, Patrick, in your journal. So I would say that this is your Fab4, okay? And, oh, sorry, taking it off here. Okay, there it is again. So, you say, I missed an anticipating bottoming tail bar entry due to fear and uncertainty of stock opening in the trap zone, all right? Well, what can you do with that? Is this an anticipatory bar? Everybody, is this a question for everybody? Is this an anticipatory bar here? Is bottoming tail bar, yes or no? I see 3 yeses. I see a couple of no's. Nope. Okay. Let's look at it this way. Here is our Fab4, right? This is the congestion zone from yesterday. This is the size of the bars there. So how big should a bar be to be really a bull elephant, an elephant-sized bar? Well, it would probably have to be something like this, right? Something like this. So this bar is actually very small. This little bottom tail bar is really small. So how can you anticipate on a small bar like that? You can't. You can't. You need a bigger tail. Had this tail been like this, it's a different story. Now it's a big bar. So now you have a huge tail, big bounce, and then you could think of entering here in this bar. That is an option to do that. Okay. This bar is really too small for an anticipatory entry. However, look what happens next. It gets follow through here, right? So in fact, you can look at it as this. It starts here, right? Now wait, let me do this correctly so everybody understands this. So this thing starts here to the downside, right? So we start with a red move to the downside, and then it turns around, leaving the tail. So in fact, this here is in fact a composed bull elephant bar. You see that? So now, what is going on here? What is the word here that we use for this kind of movement? A bar. Had this been an elephant bar, what kind of elephant? Exactly, Ali. This is a clearing bar. It's breaking out. It is just everything that happened yesterday is now history. It's over. It doesn't exist anymore. It has no value. So suddenly the whole chart has changed now, okay? So where can we get in this trade, Patrick? We can get in this trade roughly above here. See that? But you have to see this as a continuous move, really, as one bar. And you can actually enter somewhere here. You just jam it up here. It's breaking out. It's clearing everything to the left. On a beautiful location, because we also have the MA200 here. See that? Super. And if it doesn't work, maybe you get a big bar to the downside here. It fails immediately, right? What do? Stop and reverse, right? Okay. So anyway, you missed that, and then we move on. So let's now take a look here. So here you have a little bar here, yeah, you call this a hidden RBI. Okay. I call this. I like to call this a green RBI. That's just a joke of me, from me, of course. But the fact is that with an RBI or a GBI, the color of the body really doesn't matter. It's usually red in this case, but not all the time. But that doesn't take away from the fact that it is actually a pause bar, and that is what counts here. It's a pause, right? You have the push to the upside, then you have the pause, and then we move on. That is the whole RBI, GBI concept. That's what it's all about. So the fact whether it's red or not is really not relevant at all, okay? So green RBI or hidden RBI, I mean, it's also a little red here, true. So you enter in this trade. This is a great entry. It's perfect. There's nothing wrong with that. You decide to use an event stop here. Okay, immediately under the little bar. The plus of that is that your risk is very small, obviously, right? The risk is very small. Another option would be to put the stop here, for example. Why? Because this is all support here, right? Even better to put it here, because all of this is support. See that? All of this is actually, this is one huge support zone that also is actually including the MA200. So there's a big cushion of support here. So putting the stop all the way below here is not a bad idea, actually. The advantage is that you will not be stopped out as frequently, because this kind of entry here, it worked, but then many times you have to be ready to accept many stop outs here, because it just blips back and then it goes and you have to re-enter again. That's the price you pay for the low stop here, for the low risk, for the low risk here. No risk comes with a price. Everything comes with a price. There's no free lunch here, and there's also no free beer. Okay? So anyway, entry here, stop here, and there is our follow through here. And then you say, one look due to fear and uncertainty. Ooh, again, look here, here. Okay, but at least you're honest about that. That's good to. It's not just you're aware of this. I should say that's the right word. You should. It's good to be aware of this. That this is actually causing you problems, and you need to find a way to work about this, right? To overcome this, because it is sabotaging your trading. Okay. In hindsight, it's easier to see that, of course. Okay, so a big bar here, and then you take profits here, and the profit take reasons are: number one, prior resistance from the past few days. Now, that's nowhere in the checklist, right? So you're just adding things now because of the fear and the uncertainty. You're basically looking in all kinds of other time frames for confirmation so that you feel less nervous about what's going on here, right? So don't do that, because it's not in any checklist that we're using. Okay, I'm reading your mind, Patrick, right? Do you know why I'm reading your mind? Why I'm so good at that? Because I've been there, I've done that, okay? Fortunately for me, it's a while ago, but I used to be doing the same thing. I know what you feel. I know what I recognize, I see it, and I immediately see how I was trading many years ago in the same way. That's why I can just smell the fear here and see why you're doing this. Okay, this is out. 3 pushes from better entry and only 1 lot. Okay, 3 or even 2. Yeah, 2 or 3 it depends a little bit. But I do like that you write that, because look, this is the better entry from here. So then we have 1 push up here, okay? And this one we could count probably as 2 bars, 2 pushes, okay? So definitely a great profit take here. Nothing wrong with that, because when you take profits, when you count your pushes, you do so from the perfect entry, right? Not from where you happen to enter, because like in this case, this entry is actually very late in the move. The move is well underway here. A much better entry, as we discussed, was here. Okay, so you have to count from here. The market has no mercy there. It's not going to say, okay, I was late, so it will give me an extra push here to make up for that. That's not the way it works, of course. All right. Cool. So, and the last one here, a profit take treating my P&L. Again, as I said before, awareness is the start of every solution, right? The first thing, before you can solve any of your problems, the first thing you have to do is become aware of the fact that you do have problems and be able to identify them, recognize them, okay? And this tells me, the fact that you can write these things down here tells me that you're on that path, and that is very encouraging, I think. Okay, very good. All right. So next one here is Uber, is this the same one? Yes, it's the same one. Oh yeah, right. Oh yeah, that's right. Now I remember. From Carla. Hi, Carla. Carla's in the Spanish room. Oh, also in the English room. Okay, cool. So let's see what Carla did here. So Carla actually, she showed no fear here. She was fearless. She saw this bar as well, and she said, I'm just going in. Okay, I'm buying 2 lots here. She entered right above that bar. Then actually sees this little hidden RBI here. Everybody see that? You see the 2 bars, drops and goes back. Same thing. Actually, the place where Patrick entered adds to the trade here. Now she's 3 lots in the trade here. Very nice. And then event stop, of course. Yeah. Step number 4, profit take on 3 pushes. Yeah, well, 2 pushes. This is, I would say this is 2 pushes, Carla. Look, we have like 1 push up here, okay? Then we have like another push here. And because this bar is so big, you could actually maybe say that this is like the 3rd push. So if you want to take profits here, that's fine, but I would definitely think you have to do that in the upper part of this bar. This is too early. Or you say I take 2 pushes profit, of course, that's another option here. Okay. Look at the beauty of this journal, traders. This is the way to do it, because this is what journaling is all about. She is documenting what she did here, and then she makes a note here in blue and say, I should have waited until taken profits at this point here. You see, this is carrying lessons from the past into the future. So bring them with you tomorrow when you're trading tomorrow, this kind of thing, that be careful not to take profits too early, okay? So step number 5, color stop. Okay, now I think we have something to talk about, because if I see this correctly, separate stop, okay? Anyway, this stop is, you say separate stop, but I don't understand the word separate here, because did that apply to the hidden RBI? If so, then this should be a 3, right? Then you applied this stop just when you added to the trade. Is that it? Not really sure what I see here. In any case, let's talk about the main stop here. The main stop here cannot yet be moved, right? Oh, this is your separate stop for this hidden RBI. Okay, fine. I get it. So that's okay. Now, if you take profits here, then this is the stop that goes, right? Because I think everybody heard Oliver talk about the LIFO concept, last in, first out. So this is your last lot that you added. It's the first one that goes out. So the profit take, like, basically cancel the add here. The profit take is really on the add, okay, not on one of the lots of the initial position. Okay, so that means that also the stop that goes with that, that comes with the add, is gone. Okay, whereas the initial stop is still here. All right. So let's see. But then you move separate stop was moved below big bar, and I think there's a confusion here. First of all, and you notice you're not supposed to move the stop until we have what? What do we need for the first stop adjustment? A profit take, Ali says. No, that's not really the case. No. Profit, okay, profit take, all right, but that will only give you an option to move, to use a break-even stop if you wanted to do that. Pullback is the right answer. Because remember, we're whale hunters. This is what we're after, right? The whale, this is what we're really after. Taking profits here on 2 or 3 pushes in the first leg after entering here. Taking this is only extra when it gets out of hand, when we have too much profits to give back. Then we can do this after 2 or 3 pushes, but this is really what we're after here. So if our stop is here, we need to wait for that pullback before we can say, okay, now we're moving the stop up here. That is what you should be doing. So these stop adjustments are way too early. It's just too soon. This is not correct. This is not according to the checklist, okay? This is not what the checklist tells you to do. So So the stop should just be here. And now we have here is the first pullback. Here it is. There's the pullback, okay? And this here, this is what Oliver is saying when the red bars come. Who are you as a trader? Okay, now you have to sit here with that stop still in the beginning here, and just basically with the possibility that this happens, which is rare. It will happen 1 every 10 times. The other 9 times it won't happen, okay? And we're going for the 9 times. We're not interested in that 1 time. That we just accept that, right? So survive the pullback here, and then of course you can add to the trade here. Because here red takes out green, or even here you could add to the trade already. Add to the trade. And now we're getting to 8 here, and now you can move to the pivot stop. This is okay. So I think you have the concepts, but I think there was a little confusion here about the initial stop adjustments. But I think you know the rules, and maybe I hope now it's totally clear, so that you know how to apply them correctly. Okay. So, and then your stop is here, and you say, should I be out here when the new high failed? No, I don't think so. Well, and first of all, we have to always separate 2 things here. Do you consider yourself a beginner who is mastering how to trade the checklist? In that case, you should not be out anyway, because you just have to survive those pullbacks and just trade according to the checklist. Learn to accept the losses that come with trading, right? So you just stay here and you get stopped out here. That's true, okay? If you think you're more advanced as a trader, I'm not really sure that the new high fails here. This is very little that's going on here. It could very well move on, right? So I don't really see that. However, here, this is different. At this point, this big red bar and does everything to the left here. This is destructive. This is destructive. Now this move up is no longer intact, and I can see that you close the trade here. Okay? So that's a complicated answer, maybe, but it is always the same answer, basically. It depends on your state of development as a trader. And one of the hard things to do as a trader, and I think I talked about that last time as well, is that as a trader, you are your own coach. So you have to pull the brakes there and say, okay, I will stay in this trade. I will just stick with the stop. Why? Because I'm not to that level yet where I can really see the distinction between a new high failing or not failing. I need to learn how to survive these things. You see? So you are your own coach. Nobody's going to tell you to do this. Well, we do here, right? That's why it's called coaching team. So we do it. But then the other days when we're not looking, and all the trades that you don't send to us for review, we're not looking, of course. So we're not telling you that. You have to do that. That's what makes trading so very hard. Okay? You are your own coach. So you have to take a fundamental decision here. At what level of development am I? Am I just going to trade just dumb according to the checklist and just move the stop when the checklist tells me to do so? Or am I going to do sophisticated things here, like think about, did the new high fail here? Should I be out here? Should I optimize the checklist here? Am I really to that level? Okay? All right, enough about that. I hope this helps. Good trading, Carla. I really like what you did here. And I hope we clarified the way to move the stop here, so that next time I think you will be able to do it perfect. Okay? All right. Next one is Vladimir. Oh, yeah. So I wanted to show you this, guys. Vladimir sent in this journal, and then 2 days later or a day later, he sent in a new version of the journal, and much better. And I just wanted to show you that, how just the way you journal things can make such a difference. Because what do we see here? First of all, you see, we have no idea what happened yesterday here. We don't know, because he didn't include that here, okay? So, so what he did in the next one, he does include that. And I just wanted to show you the difference. See, this is a totally different journal. Now we have overview over the market, over the chart. Now we see the Fab4. So now we have like a reference point in the chart. Now we have something that tells us what is up and what is down, what is high and what is low. Whereas in the previous chart, we didn't have that. We don't know what's going on there. We're going up and down. It's like totally unclear. Okay. So thank you for reworking this, Vladimir. I think that was it was a great thing to do. And let's see how we played this LVS trade. LVS. Okay. Max loss per trade, $90. I love that you guys specify that. Then we know what we're doing here. So step number one, he identifies a bull elephant bar here. There it is. Beautiful bull elephant bar. Look, this bar is like at least twice as big as all those bars here in the congestion zone. That is a bull elephant bar. Yeah, awesome job, Vladimir. Very good. Very good. Location plus. Perfect. Just above that Fab 4. Location plus. Anticipatory entry. I can see that. Yeah, it's like elephant bar. Maybe it's almost, yeah, it's sort of a plus bar. It's a little on the border, but I can see the anticipatory entry. And then you're saying max loss per trade stop. Okay, you don't have to do that, right? Max loss per trade stop is not necessary here because we only do max loss per trade stop when our event stop is like close to or into the MA200 zone, right? And there's quite a distance here. Well, it's not that much. It's 10, 15 cents or so, but it's enough to say, okay, I'm not doing that. I'm going for an event stop instead. All right. It's not wrong, however, to use a max loss per trade stop. That's okay. Let's see how you did that. You're using 2 lots here, and you have a $90 max loss per trade. So that means that you have 45 cents here for your max loss per trade stop. So if you enter here, roughly at 95, think 45, so at 50 roughly, that's here. Exactly, that is exactly where you marked it. That's where your max loss per trade stop ends up to be. Okay, cool. So this is optional, okay? This was not mandatory here. You could use an event stop without any problem, but you picked a max loss per trade stop, fine. You could also have used an event stop here and maybe use 3 lots instead of 2. Okay? There we go. Push up here. You say I have 2 pushes. I have 35 cents. I'm out with 1 lot. So you're selling 1 lot here. Then you're adding it back on here on the hidden RBI. Here it is, right? Everybody see it? This little tail here, this drop here is red. Then we get green again. So we have a hidden RBI. And he's adding it back to the trade. Okay, cool. Going on here. We're moving on, and then we get at 4 here, we get stopped. Oh, wait a minute, stop adjustment here. Oh, stop adjustment after 3 pushes, sorry. Now I get it. So on the ad here, you're moving the stop up. All right. Same question to you, Vladimir. When do we use this? When are we allowed to move the stop up? Question was just answered. And I make it my mission today to drill that into your brains. Your trader brains. When are we allowed to move the stop for the first time? Not after a profit take. After a pullback. Perfect. Okay, excellent. So we have a great lesson from today already. So this stop adjustment is not good here. Okay, and look what happens. You get stopped out immediately. Now you will say maybe, yeah, but look, it never made the new high. Okay, but you don't know that, right? In many cases, what will happen is it will go back here and then it makes that new high anyway. It just goes straight up there. But you're out because you jammed up your stop too soon. You did not survive the pullback, right? Okay, as a matter of fact, what kind of pullback is this? What kind of pullback is this? What do you call this kind of pullback? Yeah, this is a double dip, right? Double dip here. So, so that makes it even harder to survive, right? This is another reason why you want to maintain that stop, want to maintain it, and then you can only do it, move the stop up once you take out like 75%. Well, it's borderline here, okay? Borderline. But I couldn't, if you stayed in here, I definitely couldn't fault you for moving that stop up here. And you have the right to do that, okay? And you would be stopped out anyway by the double dip then. Doesn't always work. Nothing always works. Anyway, you do like, and this is great, of course, you do re-enter here on this bar. That's a great observation. This bar is actually, in the pullback, is the one that gets you back into the trade, and you get stopped out again, right? Okay, because when you enter here, then of course you have to put your stop below here. You cannot go and put it here. That doesn't make any sense, right? So this stock really didn't do what you wanted to do, right? What we're after is this, of course, right? The whale, or second version of the whale is this one, right? With the double dip. This is the double dip version. Either this one or this one. That's what we're after. But it doesn't always work. This works 7 out of 10 times, right? The other 3 times it doesn't work, like here, and we accept that. No big deal. I mean, you had some profits here, and you got stopped out later. So I think you probably came out with a small loss, or maybe even a small profit. That's great. That's perfect. Yeah. You were hoping for one, obviously. Yeah. Hoping. Yeah. Hopium. You're on hopium, right? But you don't have to hope for one, because you don't have to do that, because you know that it happens 7 out of 10 times, right? So you don't have to hope that the current trade is going to be one of those 7, because it could also be one of those 3. It doesn't matter. It doesn't matter, because they come when the ones that don't work and the ones that do work, they come in a random order. You don't know when they will come. Okay. So no need to hope. Just play them out. After every 10 trades, you will likely have 7 whales and 3 failed whales. That's the way it goes. Okay. One thing here about what was it? There was something I wanted to talk about. Oh, right. Okay. Profit take here, 2 pushes, right? That's what you did. Okay, I get that. You cut this bar in 2. You say 2 pushes. Okay. But another thing that we already covered today, this bar is growing really big, right? So what do you do preferably here when you see a big bar like this? Do you take profits there? No. What do you do? What is the right thing to do here? Exactly, you wait for the follow through to that bar. So this is the proper profit take point here. A couple of pennies above. So when you see this bar growing, and as soon as it's finished, you use one of your hotkeys to throw an order a couple of pennies above the high of the bar, and you're going to see what happens here. Okay? Ali is saying, was the RBI ad proper? Absolutely, it was even mandatory, Ali, because the checklist tells you that you have to add on the first RBI, right? Now this is a hidden RBI, but if you have developed enough to recognize a hidden RBI, then a hidden RBI is just like an RBI. So it is a must add, actually. You have to. Okay? Because normally what will happen, what do you expect here? What do we expect here? We expect follow through here. This is what normally happens in most cases. It didn't happen here. In most cases, that will happen. So you add here, and then you start taking profits here in this bar. That is the recipe of the checklist. Isn't that too far from the initial move? No. Why would it be too far? It's just 2 bars here, up 2 green bars. I don't think this is far. Not at all. I mean, if you look from the beginning of the day, we opened here at 70. We're now trading at 40 here. Okay, so 70 cents. No, I don't think that is too far. The RBI was far above from the 8 MA and the 20 MA, but the 8 MA is not relevant at the open, as is the MA20 is not relevant at the open, because what does this measure? Especially here at this point, it measures everything from yesterday. Right? So you can cut that out. The 8 MA is not relevant here at all. Okay, so the MA200, yeah, okay, but there is not really a gap or so. This is not like we're gapping $1 and then we move on. This is a very tiny gap. This is not really relevant here. So I don't see any. And to the contrary, I think you should look at this different, Gurmeet. Look at it this way. You have very strong power to the upside here. This is very strong, what's going on here. Okay? This is a big move up here. Even actually, if you include from yesterday's close, this is what you have here. This is bull power, right? The bulls are really running here. Great ad. Great ad. What you can do is use a separate stop on that ad. If you're scared that your risk is getting too big, you can use a separate stop. So, but you would be adding a 20 cents risk to the trade. That you can do. And if you get stopped out on this lot that you added here, you will still be in with the other two lots. Okay, does that help? Okay. All right. All right, let's move on to the next one, which is from Ali. There we go, Ali. Let's see what you did here on Zoom. This is Zoom, I think, right? Yeah, I never. Oh yeah, Zoom. Yeah. Okay. Right. Zoom opens here. I like the journal here because this is also nicely pointed out. Where is my trap zone? Right there it is. There is the trap zone. So it opens actually below the trap zone, jams right into it, and actually breaks it on the upside. Okay. Awesome, Vladimir. Very good. Happy to hear that. It breaks here, and this is like a little pullback here, right? You see that? So now we have a big move up, and then we have a pullback here. See that? That's what we have. Now the question is, of course, is this enough for a pullback or not? Because if it is, then we have whale complete here, right? So I would say that in this case, this is like a pullback. Why? First of all, this is 50% here, right? This is 50% of this move up here. It's the move up, okay? So the pullback is roughly to 50% and to the MA200 here. And it is like, well, it's 2 bars. It's not 3 bars, but 2 bar pullbacks are possible, okay? So that would mean that this is actually whale complete here, okay? However, later we go sideways here, and then we get a breakout from this consolidation here, and that is actually a new opportunity to get into the trade. This entry is technically not wrong, I think, Ali, but I don't really like it because, first of all, as I pointed out, we have this move here already, right? And now you're entering here after whale complete. Not the best of all entries. On the other hand, it's not actually a bad entry because there is, let me see. Okay, no, you could argue that the MA20 is valid here. So it pulls back to the MA20, and then you have your bottoming tail bar. Okay, all right. I buy that. I'll buy that. Okay, so you enter here, and then you take profits here on the new high. Okay, but then next time, try to take profits here on the follow through on the new high. You see, this bar makes the new high. It's better to take profits here if you want to do that. You see that? Also, actually, you need 2 lots in this trade. What is your real problem with this trade, Ali? Do you know what your real problem is here? Why is this? Because you're writing this in hindsight, right? But I know why you couldn't do this. I can see it immediately. What is your real problem here? Where did this go wrong? Yeah, 1 lot. And why do you have only 1 lot? Why do you only have 1 lot? Yeah, you're trading a stock here, $360 stock here. Why? Why not trade a stock that is $60 or $80 stock, something like that? Because it will be much more likely that the volatility is low and that you can actually afford 2 lots on that stock. The fact that you're looking at this stock already, before you have even taken the trade, you have already lost half. You see? Before you have even accepted any trade here, you have already lost, actually, well, half of your trades because you can't afford it. What you're trying to do here is you have a regular job with a nice income, okay? Nothing bad, nothing wrong with that. And now you're trying to buy a $5 million house. That's what you're doing. it's going to kill you, right? Eventually it's going to kill you. There will be moments when this works, but there will be many that there are not. Because if you had two lots here, you could take one lot off here on the follow through, okay? And the other one you could easily ride out here all the way to here. You wouldn't have any problem with that. But the fact that you have only one, it makes you nervous. Yes, definitely. Of course it makes you nervous. Yeah. Look at the opening bar here. That's the last thing I'll say about it. Look at the opening bar here. This bar starts roughly at 358, goes all the way to 362. This is a $4 bar. If you buy one lot there, already you're risking $400 on this trade. So that should be enough to show you that you could never trade this stock. Well, I don't know how big your account size is, but I'm assuming you're using a graduation account. You have no chance. This is not going to work. Okay? So look into that. Try to look at your stocks, and maybe you can downsize them a little bit. Okay? All right. Next trade. This is a trade by. Who'll make this trade? Oh, was it Marilyn? Was it you, Marilyn? Is this you? Marilyn, are you there? Yes, it's you, right? Okay, I remembered correctly. Okay. Hi, Marilyn. So this is Guild. Let's see what happened to Guild here, what you did with Guild. So Guild, so you see this big bar here, and then you enter here below the green, okay? Confirmation event. Okay, but what event actually? What event? Because I see here 2 lots short, okay? Position minus, all right? Although, yeah, okay, well, let's say that we'll look at that. Event confirmed, but what event is being confirmed here? What is the name of the event? Because you need a location and an event, right? If you cannot identify an event, then there's a problem. So what event is this? GBI, yeah, I guess you could call it a GBI. The problem is there's a lot of tail. It's actually quite a big bar. For a GBI is a small bar, right? It's a pause. But in a way, I can see it. These 2 bars. You could also say topping tail bar maybe, because this is the tail, right? Here's the tail of that bar. Okay, so let's say topping tail bar, and then you're entering below there with 2 lots. Stop is where's your stop? 1 penny above the previous tail bar. Okay, so here. Okay, so your stop is here, and then we go on, and then somehow you are out here, and you say that is because it violated the 8MA 3 times. Okay, is that a rule in the checklist? If it violates the 8MA 3 times, then I'm out of the trade. I close the trade. Is that a rule? I don't think so. I don't think so. So I don't see any reason to close the trade here. At least not for that reason. Okay? No opportunity to add and take off any lots. Well, I'm not so sure. What is one of your profit take rules? What is one of your profit take rules? It was not following the 8MA anymore. Okay, but who cares? I don't even have the 8MA on my chart. I don't even know where it is. And the checklist is not talking about the 8MA, except after you have identified a power trend and you want to trail it out. So we don't use the 8MA for anything else than that. Okay? So that is not a reason to start to interfere with the plan, because basically what you're doing here is you're coming with some reasoning that is not a part of the plan, and you're using that reasoning to interfere with the trade and close it. Okay? And that is not going to help you. That's not going to be very helpful. The whole idea of the whole idea with the plan is basically that that we're going to eliminate your decisions. Everything has already been decided by the plan. All you have to do is just execute it. And you may have all kinds of thoughts about what's going on and think maybe I should close here or interfere there, or maybe this is going to happen. But all of that is exactly what we're trying to eliminate. We do not we cannot use those thoughts really in these trades, okay? Because they will just mess everything up ultimately. So, okay. Anyway, is this a nice entry or not? This bar here, is this a nice entry or is this just any entry, or it's not an entry? What do you guys think? Is this great or is it not great? And why? Can I have some answers, please? Ali says, should have dived into that bar, okay? Yes, Cynthia says, yes, I think that means that it's a great entry. Patrick says it's off the 200, that's right. Marilyn says it's great, okay? Vladimir says, I see a very wide Fab 4, okay. Yeah, it's very wide, yeah. It's really impressive. It is actually about 40 cents, right? Yeah, 40 cent Fab 4. Nah, it's not really wide, is it, Vladimir? That doesn't scare us. I'll wait for that. Marilyn says, I do not play the open because I have been burned too often. Okay, but isn't that why you're here? Because you want to learn how to do it? So shouldn't you just be exactly doing that? Trade the open and make those mistakes, get burned, so at some point you get it under control and you can do it. Because I think that is what your goal should be here. So what I did is I printed this chart out because this is a great trade, and I thought I should spend some time here showing you guys how to trade this, how the checklist will actually trade this. Okay, so let's take a quick look here. So we have this big bar here. Well, big, it's like 45 cents, right? The opening bar. So we see here, identify here a bear elephant bar. And how big is this bear elephant bar? Well, actually, this is like a dual size bear elephant bar. So it's also a plus bar, right? And that means that somewhere in this area, this is somewhere where your entry should be. As soon as it, because here it has already elephant status. Does everybody see that? Elephant status here. So it moves on, and now we have elephant plus status here. So this is the time when you jump in here, okay? All right, so we enter here. So we have identification, bear elephant bar. Actually, at the time of entry, it's a bear elephant plus. Later, it turns into a dual bear elephant bar. Location, well, here is your Fab 4. So location is minus, single minus, because we are just below the Fabulous 4 here. So we have an anticipatory entry here, right? We need to enter our anticipation because we are in the bear elephant plus territory here. Then our stop. Well, the stop can be here because it's a little close to the MA200, but I don't think it requires a max loss per trade really, because this bar is so important here that you don't want that to be taken out here, and you are a little above the MA200, like 5 to 10 cents. So that is okay. That is okay. All right. Nias is asking, can we make an anticipatory entry into 1 minute and 20 seconds into this bar? Absolutely. Yes, you can do that. Make sure you wait at least 1 minute. 1 minute, and preferably a little bit longer. But if this thing is really powerful and in a beautiful location like it is here, you just go for it. You just do it. Okay? So now we're in here. We have our stop here, event stop. So these are the first 4 parts of the checklist, right? Identification, location, entry method, and initial stop. We have this all pointed out here. Now, let's see what happens. It goes on here. We have like 2 pushes here. You could take some profits here, but you don't have to. You don't have to do that. It's probably better to wait for 3 pushes, okay? Let's wait for 3 pushes here. Now, this goes up again. You can add here. So where Marilyn entered into the trade, you can do an add here, okay? So now you have 2 lots here. Sorry. So we have 2 lots here, and now we add 1 lot here. So now we're 3 lots short in the trade. And now we get our pushes because we entered here. We have 1 push, 2 pushes, 3 pushes. So somewhere here is where you take your first profit. Okay? Marilyn is saying that elephant was too big to fit my 2 lot and MLPT. Okay, let's take a look at that. How much is your max loss per trade, Marilyn? $100. Okay, let's take a look here. So this is roughly, let's say we are at $76.00 here, okay? And the entry I just pointed out, right? The entry should be roughly here at this point. So we're talking, let's say we are at 70, okay? .70. So that is 30 cents here, risk per lot. So if you short 2 lots here and you place your stop, well, even if you use a max loss per trade stop, it would even end up here. You can be 2 lots short here without any problems. So I don't see that, Marilyn. I think you miscalculated this. You see that you would only have like a $60 risk here with an event stop and maybe a little bit more if you wanted to place your stop a little higher. Would you agree with that? On anticipatory entry, of course. Let's see what Marilyn says about it. It works if I got in after the first minute. Exactly. But you should, because you should recognize, and if you don't, then take a note of this, because this is very important. This is what Oliver calls his favorite, most powerful play. Search of the MA200. Here's your MA200, right? And you get a solid big bar that starts at the MA200 and just moves away from it. Okay? If that happens and it's a sizable bar, it gets to Elephant Plus status after 1 minute, you just short the hell out of it. Okay? All in. Anything you can afford. That is what you should be doing here. Because these bars tend to follow through. These bars tend to start big moves. Right? This is why you want to be all over this. And that's exactly what I'm trying to show you. So 2 lots short here, roughly, add 1 lot here, and first cover here. So you can take a profit here. See that? And now you have already some profit here. The stop is still here. And this is what the checklist will be doing. Now we get the bounce here. All right? Get the bounce here. And then look at this bar here. What is the location of this red bar? Well, it's about 50%, right? 50% from the start of the move here. Okay? So this is a great location. Add to the play again. Add it back on here. Okay? Now, wait a minute. Dennis is asking, should you not have entered earlier? It would be too early. Exactly. You have to wait at least 1 minute, Dennis. Plus, you need Elephant Plus size. You see the open bar as 4 times Elephant Plus? No, I don't. No, this is like a dual Elephant bar. Not a 4-time Elephant bar. It's just a dual Elephant bar. This is, I don't agree with that. It's big, but it's not that big. Okay. All right. So, let's see. So add here to the trade, right? Stop is still here. Eh? The stop is still here. We're adding to the trade. Why? The stop. Many of you think of the stop as a place where you're going to be kicked out of the game with an incredible loss, right? That is not the idea. The stop is there in this location just as the last resort if all else fails. What you're really doing is you're creating an area here, this area. You're creating this area so you can work the trade. You can add to it. You can see if there is a reason to close the trade. You can. It's like well, as I'm saying, it's like the area where you can work the trade, right? And you want to, at some point, you want to move that stop down. That is the whole idea, right? And that's usually possible. Okay, Gourmet is saying, did we not move the stop to break even at the 3 push profit take? You can do that. I don't do that. in this case. Okay, I don't see any reason to do that. That is, to me, that is P&L trading. You're just scared to give back your profits. But you can also think a different way. This market, this is a very strong move to the downside. This is just not going to be taken out, normally speaking. So you can use this whole area to work the trade and get a bigger profit. But you have to give the trade the room to develop. If you start moving your stop down, Gurmeet, to a place that is convenient for your P&L, you're basically messing with the market, right? And who decides what's going on? It's the market. It's not your P&L. So you're setting yourself up for failure. That's the way I think about that. That's why I hate the break-even stop. I will use it in certain cases, but rarely, okay? Now, we go on. So let me just finish this. So we were 2 lots in here. We had 1 add here. Then we cover 1 lot here, okay? Then here we move back up. And here, below this solid bear elephant bar here, that is where we can add back on. And the stop is still here. Now this trade is moving sideways. Do you see I'm not adjusting the stop here? I'm not doing that because there is no rule that will allow me to do this. And I don't want to do that. Why would I want to move my stop if I know that this bar is protecting me with big resistance here, as is the MA200, and my stop is all above that? There is a whole big area here that is likely going to do something when we move up. If I pull my stop down too quickly, if I pull the stop here, look what happens. I get nicked out. That is exactly what happens. I don't want that. So only after some time, when it finally starts to move down here, especially after this one here, this is an optional add. You don't have to, but you can. When we get in this area, now it is time to move that stop down here and protect the trade here. Okay? Because now, if now it goes back here, that is not good. Then we have a problem. That everything that has been accomplished is basically being destroyed and it's time to move out. Okay? But until that time, you give the trade room to develop. Now look what's happening here. What is this? What is this, traders? What is this here? What do we call that? Whoa! Power trending. Beautiful. So what do? Our stop is here. And we see this power trend. Where do we say this is a power trend? Well, probably somewhere here. Okay? So when we get here, now we're starting to apply some moving average 13 or 8. I'm not sure which one it is. We're starting to apply that. And when and we don't take any profits anymore, right? We're not taking profits anymore. Unless we see a big acceleration to the downside, big fat bars. That's a different story. If we don't see that, we're not taking any profits anymore. We're just trying to ride out the power trend. Okay? And so it goes here, and then if that gets broken, that MA8 or MA13 or whatever it is, and then 1 penny above, possibly here, we're out of the trade. Okay? Or maybe that happened later, but I don't know exactly. It doesn't matter. It's about the concept. Okay? So what I want you traders to see is what an incredible, beautiful trade this could have been, if you just trade it according to the checklist. Entry here, 2 lots, add to the trade, cover 1 lot, add to the trade, move the stop down, but only when we get here, right? So at this point, roughly here, now we move that stop down to this level because we don't want to be stopped out here. And then when we get here, we move that stop down here and we get out of the trade here with the remaining 2 lots, okay? Plus 2. Big profits, right? Do you see this, Marilyn? And others? This is helpful. To be perfectly honest, this is the way I would trade it, because I would be applying the checklist here, definitely. And this is the way I would have traded it. If I don't make a mistake, I mean, I make mistakes as well, but normally speaking, this is exactly what I would have done to this trade. Okay? So, Marilyn says still rookie status. Yeah, but that's why you're here, right? If you didn't have the rookie status, you wouldn't be here. So it's great. You're just exactly in the right spot here, and we're just trying to help you to make progress here. So This is why I decided that I wanted to spend some time covering this trade here to show you what a potential there is if you just apply the rules and learn how to do that so that you can actually do it. Because knowing what to do is one thing, but being able to do what you know you have to do is a totally different thing, right? Okay, now let's see. Any questions that I missed here? Dennis is saying, would you say initial early entry is key to get good positioning? Absolutely. Absolutely, Dennis. If you should strike when you have enough reason to enter the trade, because if you wait, you're basically missing the opportunity, right? Something wrong there. So it can only get worse. So absolutely, identification of the proper moment to enter into the trade is key, of course. Absolutely. And 2-minute entry would have been too late. Dennis is saying absolutely, because a 2-minute entry gets you in the trade here on confirmation, right? Or what you can do, if you see this, that you missed this, right? Now, suppose you missed this. Would you enter here? You can do that with one lot, maybe. You can do that. What you can also do is throw a limit order somewhere here, up the bar, roughly where you should have entered. So you recognize in hindsight that this is a dual elephant bar, and that this is roughly where this bar turns into elephant plus status. And you say, oh, damn, I should have entered here. Stupid. I'm an idiot. How could I do that? Okay, no problem. What you do is you throw an order somewhere up here, and you hope that the market bounces up, picks you up, and then goes. If it doesn't, you take the order out. Okay? If it does, it's your lucky day. Okay. All right. Any other questions here? Patrick says it helps a lot when you show how you would trade a stock. Okay. My pleasure. Niels says it's completely different from how I traded it. Okay. Next time, Niels. And okay, Dennis says it's great to see how you think and trade. Okay. Thank you. All right. So I hope this helps. And this brings me, I'm now more than an hour in here. I have a couple of more journals to go. I'll let me ask Paola and Tony what we should do. I have no problem to cut here, but if there's time, I have no problem to move on as well. I would like to leave it up to them to decide. If they have something important to do and they want me to stop now, I'll do that. So what do you think, Tony, Paola? Just tell me how you feel. Don't be shy. Just tell me to move out. Ah, Paola. Look, they're teaming up thank you so much. Okay. Paola, we have trained her very well. She knows that what started as a 1.5-hour coaching session is usually going up to 3 hours these days. Okay. I will go on another 20 minutes or so and then move over to Tony, okay? Because I think there is some very good value in these journals, and also because we have just covered the checklist and the journaling in the last 4 sessions, I think it's good to really try and hammer some of these concepts in, okay? Quickly on that, with Vladimir here, trading. He's trading VZ, I think that's Verizon, I'm not sure, I never traded that. $90 max loss per trade, and tight Fab 4 here. Okay, nice. What's the problem, Vladimir? I don't know if it's a tight Fab 4. I cannot even see the prices here. You just stole the prices from us, so we don't know. So next time, please include the prices. We have to do without that. So I cannot know how much risk you took. I have. And to be honest, because I never traded this stock, I don't even have an idea on which price range it really is trading. So please include the prices next time, okay? Identification, gift. Yeah, well, there is a gift. Okay, I see that, but of course we want to see an event. But you mentioned the event is a bear elephant bar. Okay, how big is this bar, Vladimir? Is it a bear elephant bar or is it a bear elephant bar plus? What do you think? What would you say? Bear elephant bar or bear elephant bar plus? Yes, I think it's definitely plus. Why is it plus? If you can take off 1/3 of the bar here and this is still elephant size, then this is an elephant bar plus. Okay, so if you see this elephant here, this is definitely an elephant. Look at the bars from yesterday here. Okay, this is definitely elephant size. So bear elephant bar plus. And if you have a bear elephant bar plus, what are you supposed to do? Oh, thank you, Dennis. Yes. Okay. Thanks for the anticipation. Exactly. So this was your first entry here. Okay. This was the proper entry to this trade. Anticipation here. Okay. So, oh, sorry, you wrote that down. Yeah. And how did he do that? He wrote it in blue. So it pops out of here as an error, and I didn't even see it. I'm sorry, Vladimir. I guess I'm getting a bit tired here. Doesn't matter. Actually, you're entering here on the GBI, right? This is a great GBI. Now, this is a GBI. It's a tiny bar. It's a pause. It's a pause after a push. So you have a big push down here. Then you have a pause, and then we continue there. So entry here is actually GBI. That is your event. Okay. And your stop is also here, right? Because you see bear elephant bar, but what you're really doing is this. You're entering on the GBI instead of the elephant bar, and your stop is event above the GBI, because an event stop for the elephant bar would be here. See that? Okay, so 2 lots short here. We're going down here, and then you decide to add to the trade here. You say the add should be here. I'm late. That's right. That's right. Good observation. Good observation. Next time better. Okay. And this is a little curious. This puzzles me a little bit. So you add here, and then you cover immediately again. So what happened here? I mean, does that make sense? Big profits here on the add? Don't think so, Vladimir. So if you add to a trade, that means that you also expect like quite some potential to move on there, to follow through, and you didn't do that. So basically, this is like this doesn't make any sense. Okay, and I see a stop adjustment here, like this on the add. Well, we don't really have a pullback here, right? This is not really a pullback, so I cannot agree to that either. I don't see this stop adjustment. It's just too early. Then Vladimir says it was stupid. Don't beat yourself up, Vladimir. No need to do that. The market will do that for you. Don't worry about it. The add was after a new low. No, this is not really a new low either, because a new low means that there is a pullback. You know, you really want to see this. This is a new low, but this is not a new low, right? It's not a new low. So, not a new low. Okay, then we move on here, and now this is more than this is a pullback here. This is a pullback because now we're really pulling back. Here we're not pulling back, we're just moving sideways, right? But here we're pulling back, and we have 3 bars in the pullback, which is great. As a matter of fact, there's an add here. You don't have to take it because you already had an add here. Oh, sorry, you have to. Sorry, you do have to take it because it's the first pullback. Checklist. Again, a checklist is a drilling machine. Okay, it tells you exactly what to do. So checklist says mandatory add on the first RBI or GBI. Okay, here it is. Here it is. Yeah, this is your first GBI, provided that you enter here. Okay, you entered here. Well, then here's your first GBI. You have to add here, which basically you tried to do. That's good. That's the first mandatory add. Second mandatory add is on a pullback. There's your pullback. So this is a mandatory add. Okay. And then you get your new low here. So you're covering on the new low. All right. And that's the moment to move the stop down. That makes sense. Now you can move your stop down here and protect yourself and see what happens. However, you see at some point that now something has changed. This thing is actually power trending, and you're saying, okay, now I'm going to use a moving average 8 stop because I see a power trend. Awesome. That is very good. The question is, at what moment did you see that? You should mark that in the chart in your journal. What is the bar when you told yourself, hey, that's a power trend? That is the question here, okay? Because you cannot just start doing that at any time. Here you still have like a little bit of a trending thing, see that? But here we get those tiny bars and everything. So I would think that this, in fact, here is probably the place, roughly this bar, especially, no, maybe, yeah, right. This bar here is it's a great place to say, now I have a power trend here. So now you have your moving average 8 and you get stopped out here, okay? So I think pretty good trading. I see a lot of checklist things here that I understand. It's just that you missed the anticipation entry here. Well, next time, of course, as always, next time. But your attempts to add were good. They were good. So I like that. But yeah, and adding and immediately covering, of course, well, that's clear, right? That doesn't make any sense. But that you probably want to avoid next time. Okay, perfect. Yeah, Vladimir is saying I need to be more precise on checklist for sure. Absolutely, and that's what we're here for, and that's one of our tasks, to drill you in doing so, to help you to get to the point where you don't really think anymore. You just hit the button because you recognize that there is a situation in the checklist that you're supposed to act on. Okay, and if there's something else going on and some big red bars are showing up, you don't do anything because the checklist tells you. But no, actually, there's nothing in the checklist that tells you to adjust your stop. So you just let it go against you without any problem. Okay? All right. Question by Jill Aton. Through stop adjustments in a trade, can we have a negative risk? Profit secured by stop adjustment. Can we take more risk in these cases? For example, we stop adjust 50 cents above 2 lots long entry. Can we add 100 to our risk? So if I understand your question correctly, Jill, what you're really asking is, can I use the profits again to risk them on the trade? And the answer is yes, you can do that, of course. If you have moved up your stop to a point where you know that no matter what happens, you have like $100 profit locked in, then in principle, there is no reason to, I mean, in principle, you can risk that money or part of it, of course, in the trade. Is that a good thing to do? Well, it's a little weird, because why are you moving the stop up? Well, you're moving it up to protect yourself, right? So, but here you're actually saying that you're thinking about risking it again anyway. So to me, that's a little bit of a conflict. You see, on one side you're moving the stop up to protect yourself, and on the other side you are reusing it again. But you can reuse it on another trade, perhaps, for example. Yeah, I think so. You could open another trade, maybe using some of your profits. Yeah, there's nothing wrong with that, I think. Okay? I hope that answers your question. Now we get to Greg. And Greg is trading XOM here. 2-minute chart. Max loss per trade, $80. Fab 4, nicely pointed out again. Okay? Congestion zone, MA 200. Enters 2 lots long here. On a bull elephant bar plus. Okay, yeah, it's a little hard to name these bars. I get it. And there, but for lack of a better solution here, I think that's the right thing to do. This bar, traders, was green at some point here, right? It looked like this, and it broke above the high here, so it makes total sense. You could also call it maybe, no, you can't call it a topping tail bar takeout, no, because it's not really a topping tail bar. The tail is too small. So I think bull elephant bar is a good name here. Okay, the zone is plus, that's right. So we're trading with the flow here, with the position, I should say. So perfect. Long, 2 lots, stop event. Perfect, because when do we use a max loss per trade stop? If the stop is close to or at the MA 200. It's not really that close here. It's like 15 cents away from it, I guess. I'm estimating here. No problem with that. Okay, there we go. Then you are taking one lot off here on the new high. Question, is this really a new high? I don't think so, because a new high follows on a pullback, right? Is this a pullback? No, not really. It is just sideways, a sideways move. This is a pullback here. There we go. This is pulling back. So this is really your first pullback. So taking profits here, I think you should still be complying with the push rule here, because to me this is still the first leg. This is the pullback, and there's the new high. Okay, this is the way I look at this chart. So that means that you need 2 or 3 pushes in order to take profits here. So this is like one push, and you could argue 2 pushes here. How much profits do you have? Roughly 30-35 cents, I think. You could definitely justify taking profits above the green bar here, okay? Taking one lot off. Then you add back on here on the pullback. That's great. Size corrected. I like this. This happens to me as well sometimes, right? You add to the trade and you realize that you added too much, or that your risk is out of control or something, whatever. Immediately close one of those. Bring it back to a situation where everything is risk-wise under control, okay? All right, and there we go. Now, look, now we have our new high here, as I pointed out. See, there is your whale. So now we have the new high, and you should be taking profits a little above that green bar, really. That would be the best place. It probably blipped against you, and you decided to take it. That's okay. It's okay. And here we go. And you say stopped. But why stopped here? Why were you stopped out here? What are you doing here? That's not in the journal. I assume that because we have an event stop here, and from here on, I'm not sure anymore when or where you were adjust. Oh, here you, okay, this is one stop adjustment. Wait a minute. Whale complete bar by bar. Oh, now I get it. Okay, I see it now. Yes, right, bar by bar. Why? When do we use a bar by bar stop, Greg? 2 words, 2 keywords there. Bar by bar stop we use on. I wrote it when Tyler was too far from the 20. Well, far from the 20, yeah. Distance is the first keyword, and the second one is. Anyone? When do we use a bar by bar stop? 2 keywords. Distance is the first one. The second one is angle. That's right. Angle. What you want to see is an acceleration there, okay? So if this would be going like this here, going up, and then suddenly we get a couple of bars like this, right? Now we have distance, obviously, to the MA20, and we have angle, right? That is the moment when you want to use bar by bar, because when you start to use bar by bar, you're basically saying, I want to get out of this trade. It's done. I've had enough. This is ending. This move is over, right? You're going bar by bar here, if I understand it correctly. This is way too early to do that. So what you could better do here is use a big bar stop here, because this is an impressive bar. This bar cannot fail anymore. If this trend is going anywhere, this bar cannot fail. Then, after a couple of bars here, what do we see here again? What is this again? This move? That is this move. That is a power trend. That's right, power trend. So now we move to a moving average, either 8 or 13. You just have to find out which one is giving you enough room. This drawing didn't really go the way I wanted it to. Okay, and at some point you will have a bar that goes below that MA8, for example. Let's assume it's the MA8, and then the next one goes below, and you're out of the trade. That's the way to do it. You could fit the 8, yeah, 8 or 13, yeah. One of the two. I think the 8 will probably have worked here, but I'm not sure. Sometimes that can be turn out quite different. So if it's not the 8, then you use the 13. As long as you have this room, you need this room here, right? You need this. You cannot have the moving average touch the bars, really. That's not good. You need a little room there so the stock can move. Why is using a bar by bar stop a bad thing to do? Because often what you will see, that you were lucky here, because look, this is higher, 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 right? Okay, but that doesn't happen very often. Very often you'll see this. This one goes a little lower, you're out, right? And it goes on. But this one here goes a little lower, and you're out. So bar by bar stops will nick you out of power trends more often than not. In this case, it happened to work, but in most cases, you'll be nicked out before the power trend is ending. Okay? So when you see a power trend, you trail it as a power trend. Okay? All right. Now, what else do we have here? Oh, yes. I think we're approaching the end. I think I can quickly finish this. First of all, Uber here. Patrick, today, right? Yeah, it was a great trade. I didn't take this one. I was in some other trades, but I saw this and I thought, wow, I should have been in that trade. Yeah, $60 max loss per trade. Ooh, okay. Late entry trading with fear shouldn't have with the bear elephant off the 200. Well, I couldn't have phrased it better, Patrick. I could not have phrased this better. This is exactly true. This is the most beautiful play there is. Do you guys remember we just spoke about Maryland's trade? What was that? Guild, right? Same situation. Big bar igniting off the MA200. All over that trade. This too. This is the best entry you can possibly get. This is also a elephant plus, right? So this is an anticipatory entry. See that? It's anticipatory. I'm taking off 1/3 here of this bar, and this is definitely elephant size. Okay? Anticipatory bar. Absolutely. So you should have been in actually here in this play. And then you have a little hidden GBI here. This thing comes up here, right? It comes up. So there is your ad. This is your first ad actually. And now we're going, and now you're getting in, Patrick. So basically, look what you did. You could have been in roughly at 35, right? And you're getting in roughly at 85. So you lost 50 pennies here on this trade already before you even did anything. Yeah. So this is a very late entry. And in general, you can know that because look, this move is well underway already. So by the time you get in, you're definitely too late. If you see this, you know that you missed it, right? And what do we do? What can you do when you miss a trade? In some cases, not in this case, all you can do is exactly throw a limit order where you should have entered, which is here actually roughly, or maybe a little lower. Okay, you could put a limit order here, but not by the time you get here, of course. That doesn't make sense. You don't want the market to go all the way back there. That's too late. Okay, and the other thing is you can wait for a pullback if it comes. Well, it didn't come. Okay, it's going down here. You're adding to the trade. The other thing is, yeah, this is an important point. Look, if you enter here, you have like one push already in the first bar here. See that? There's your first push. There's your second push. So where are you entering here, Patrick? You're actually entering almost in the profit take area, where other traders are taking profits. You see that? This is another important way to look at it. This is another way to see that you are really too late. You are entering in this trade where you should look at it this way. You are entering in the trade where Oliver is taking profits. That is the way to look at it. So you are selling here. You're selling here to whom? You're selling to Oliver. He's covering here, right? And you are selling your lots to Oliver, who is going home with the profits and leaves you with the problem. That is exactly what's going on here. Okay? I hope that helps. Sometimes it helps to look at it that way, right? All right, cool. So So actually, this trade is totally now. It's a big problem, this trade, right? Because look, now you are adding to the trade, but you should have been taking profits, of course, but you didn't because you were too late. And okay, so let's leave this trade for now and quickly move to the next one, which is the same trade, but now it is Ake's version. How did he do it? Well, he's shorting one lot here, anticipatory. See that? That is exactly what you should have been doing. Ake saw that. He puts his stop here and he's shorting one lot. Okay. Then he adds here on the hidden RBI. See that? GBI, sorry. Going up and goes down. Hidden GBI. Now he has 2 lots in. But he uses a separate stop here. Okay, that's perfect. And now I'm lost because now we get, oh, wait a minute. No, I'm too quick. Now we have here, oh, perfect. He's covering here, right. He's covering here. Look, 1 push, 2 push, 3 push. This is actually almost the 4th push here, right? This is a beautiful, beautiful profit take, covering here. And then he does this. And here I lose you, Ake. Here I lose you. Why are you moving to a bar by bar stop in the first leg here after just 4 bars in a day? That doesn't make any sense to me. Why, oh why? No checklist tells you that. Okay, I guess that means that you're speechless. Okay. Yeah, big bar, but when can we do the first stop adjustment, Ake? When do we do the first stop adjustment? After what? We already came by here 3 times today, I think. When is the first stop adjustment allowed? After a pullback. There's no pullback here. So no stop adjustment, right? No stop adjustment. Just stay in the trade here. However, you can get in a situation where you have so much profits, and you do, right? Because look, you are at 50 here, and there's like you enter here at 30 or 40, so you have like 80 cents profit here. What can you do? What is the alternative? There's 1 stop adjustment allowed here, only 1 before the pullback, and that's the break-even stop, right? Break-even is here for you, so you could actually move your stop here, provided that a 50% pullback will not nick you out. Well, in this case, you still have a 50% pullback very close, but on this bar here, now it's different. Now 50% is like this. You should be safe here. I can see that you move your stop to break even there. That's okay. All right. And the second thing, no, okay, fine. Yeah. So covering here and then new low here. You cover on the new low, but this is not really a new low. This is just a sideways movement. I don't really see a pullback here. So I cannot really see this as a new low and a reason to get out of the trade. I don't see it. So to me, I think you were not looking at the chart here, but you were really looking at your P&L. Is that right? And maybe your heart was beating fast and you were sweating a little bit. No? Okay, okay, sorry. All right then. Okay. Anyway, pullback necessary here. Okay? And then you were fine. Okay, cool. That's great. That's great. And then the last version. Oh, no, this is a different trade. This is the last chart. How far am I? Okay, very quickly. And I have them all down. This is a trade by, whose trade is this? Can the person who made this trade? Nias, there we are. Right. You still here, Nias? Nias, are you there? Nias? Hello? You're not here? You want me to copy a trade, but you're not here? Is that it? Okay, now very quickly then. Okay, Snap. Same situation here. So does everybody see this? Now, I hope you have seen so many examples today of this power play here. I think Oliver even calls it the power play, where you have an igniting event of the MA200. Okay, so get here, igniting event. Shorting two lots here on a Bear Elephant Plus. So we have an anticipatory entry here. Okay, that makes sense. It's exactly the same recipe as before, okay? But it's a snap. That looks similar. Number 2, adding to the trade here and then covering here. Very nice, because we have 1 push, 2 push, 3 pushes. This is a great cover here. Only thing is, it's probably better to cover only 1 lot. Yeah, only 1 lot, and then see what happens. Adding to the trade here, 1 more lot. Oh, wait a minute, there's something else. You're covering on the way up here. That is not good, right? You have to cover on the way down, meaning you throw limit orders. This here tells me that you are getting out of the trade on the way up, and that is not the right thing to do. Adding to the trade here, that is a little late maybe, because here you are already down. Look, you're down like $1.50 here on the stock now, right? 1.50. And now you're adding again to this trade. Doubtful. Anyway, the trade turns around here. No, wait, you are adding to the trade here and then you're covering at the same price immediately again. That doesn't make any sense. That doesn't make any sense, because this is the same thing. If you add here, that means that you're looking for this to happen. Follow through and covering somewhere down here. You cannot add to a trade and then close it immediately again. That doesn't make any sense. And then the other thing is getting out here again. Why? What rule is this? Stop adjustment is not allowed, right? Because the checklist tells you to maintain the stop here until you have a pullback. We have no pullback, so there is no stop adjustment here either. And that means you can also not get out here, right? +10 here, yeah. And then going long, okay. Going long against a big red wall here immediately. That is low odds. That's not a very good thing to do usually. Okay, Niels, you're not here still, right? If you don't say yes now, then I'm stopping here. No, he's not here. Okay, all right, then let's leave it at this, because I think it's more than enough. But I hope it was worth it. I thought there was some very good stuff in these journals, especially this power play of the MA200. I thought that was really important. I came back many times. I hope you took notes of that, okay? And other things as well. And we're through. So we are clean for Wednesday. We can do a whole set of new journals. So we'll be looking forward to sending those in if you can, okay? And think about those biggest loss from 20 trades, please, as well. If you have a big loss and you want us to look at it, please do that, okay? That is important to get out of the way. Tony, I hope you're still there. I hope you're not asleep. I hope I didn't lull you to sleep.
Hey, good job.
Give a little hand of applause for Jan and Tyler. Did a great job. Into overtime. Look, at 5. All right. So you guys can hear me good. Take this. Stop there. Start here. Hey, Gregory. And 2. I can get my screen up. It works. Oh, bingo. All right. So today, what do we have? Here's the Dow. Gaps up, gives you a nice green bar. Then it has follow through. Continues up, gives you another elephant bar. Look at that. Whoa. Powers up. Then it gives you like a little ribby or neutral bar. Continues up. Then finally it gives you a nice little red bar where it goes sideways. Dips a little bit and continues on up, right? Like a big whale right here. The NASDAQ NASDAQ looked a little different because there's a bear elephant bar at the open. Dive, dive, dive. It goes down. But then stops in its tracks, turns around, does a 180 if you combine these bars right through the prior day's close, and then pulls back to the prior day's close, and then continues upwards. Gives you a nice uptrend right here, all green bars, 1, 2, 3, 4, 5 bars in a row, upwards. Before it gives you a red bar and then goes sideways. Now it's giving you a little dip here and a little top and tail, so it's kind of sideways here. S&P 500 gaps up. Is your green bar and then follow through 1, 2, 3 green bars, and then gives you what? What's this called, guys? Ladies and gentlemen? What's this called over here? A red bar. Ignore. A ribby. Very good. Not a gibby, a ribby. A red bar. Ignore. Yes. So it continues on. You could have entered here, put a stop there, entered, and continued on. Remember, what happens on one side happens on the other side usually. But this leg turned out to be smaller than this leg, right? There's a couple nice legs right here. And then it goes sideways, pulls back, and continues upwards, right? We're going to talk about legs today. But first, let's look at the heat map here. Lots of green everywhere. Technology's up. All except for my favorite stock, NVIDIA, is down today, almost 3%. That's not good. But it's had such a nice run up that it's okay to have a little pullback. Apple's up, finances are up, banks are up. Look at that. Everything's up. Just about. Amazon, they're having their Prime Day today and tomorrow, and they're about break even. Their stock is anyways. Probably go up the next few days. Did they get the numbers from this Prime Day event? They're probably being the billions. Netflix is down a little. Disney's up. Entertainment is up. Drug companies are up. Healthcare is up. Then all these guys are up. Aerospace, railroads, utilities, all nice and up. So let me pull up now. We'll talk about legs, right? Leg is a fluid move followed by a pause or a break in the action. I know this is repetition to a lot of you, but for some of you it's new. It's always good to repeat these things. You might learn something that you didn't catch the first time or two. And for the new people, they become exposed to this so that in the future they can become experts at it and know what to do without thinking. Because becoming a leg counter can help you increase your accuracy and profits. For example, this was the old Roku back in the day. It gaps down, comes up a little, pulls back, and then it goes up again. Now it gives you a nice leg here because you have a pause and then another leg. Right? So this is a leg up, pause, little break, and then another leg up. So this is two legs here. 1, 2. If he would have played this short, it would have been 3 legs, but no. 1, 2. So the red moves down or a break or a pause, like a ribby or gibby. Red bar ignores in this case. You combine these. What happens on one side happens on the other. Another leg up. So repetitions what creates mastery of your skills. We got to practice this a lot. Focus on building your skills. So with knowledge that we're giving you and experience that you practice helps increase your skills. You go up the stairway of skills step by step up. Takes a little time to become a master. The market tends to turn anywhere from 3 to 5 legs 80% of the time, right? So here we had 1 leg up, 2 legs up, 3 legs up. In this case, it was only 3. So the best turns happen when one of the legs between 3 and 5 are stretched further on the last break, right? So when this last leg here, since we only have 3, is stretched further, it's out, then the turn is going to happen. It's going to roll over on you, right? It's giving you a topping tail here as a signal. Bear 180 is a signal. Whole number is a signal. This thing's rolling over here, right? Because overall it's weak. It's down, a gap down big, right? Comes like 50% up, a little more. And those are all signals that it's going to roll over on you. So you got to learn to read these charts. Read all the signals. Sometimes you miss one or two, but you'll get better at it as you practice it. So the last move, here's an example that Oliver drew, right? One leg up, one leg up, one leg up. The last leg up, this was 4 legs up in this example. If it's an excessive move, the last leg is long, then the turnover is really a solid possibility. It's going to roll over. I was just saying all of the different concepts for it to turn over. You had the whole number, the topping tails, the 180 bear, halfway back, made it halfway back, and then rose over. The last leg was longer. In this case, the extended last leg, great possibility it's going to roll over. So it doesn't happen all the time, but 70-80% of the time, it's going to do it. So Oliver would see this stuff, and he'd be shorting on this side. And we're like, what? Why is he shorting? What's going on? Why are you shorting? Because he plays the left side. But we're not there yet. That's more advanced stuff in the future. You want to come in on the right side. When you see it rolling over, and it gives you all these signals that it's rolling over, then you get on the right side. Because we have the advantage to see when it turns. And it's significant enough. So you have the advantage. You see it, right? The turnover is here when you see all these signals, right? 2 topping tails, whole numbers. Green gets eliminated. The bearish 180, halfway, 50%. It goes 50 to 60%, goes over. Could short this. If you weren't going long, the trend changes and then you short. All right, here's another example in crypto. one of Oliver's trade. Was it Tyler saying earlier that you can have Forex or stocks or whatever you wanted to trade? Well, here's a crypto example. A while back, just about a year or two ago, Bitcoin took a big drop. It was up around here in the 10,000 area, 10,500, and it just dropped. When that happened, Oliver started buying. So he would buy every time it dipped. He would buy and dip. He would buy it dip. So each one of these are legs, right? So you see these legs going up, it pulls back. Gives you another leg up, pulls back. Another leg up, pulls back. And it just did that over and over and over. The last leg was extended way up. Starts hitting all the signals, right? Now, this extended bar is an exhausted leg. Just like the trades, your origin, you could have a nice origin, and then the trend goes up, and then this area would be the exhausted area when you're trading stocks, and you catch the last area up before it rolls over. But this time it's with legs instead of the bars. This whole last leg here rolled over. This happened to be 1, 2, 4, 5 legs up, right? And then it just rolled, extended fifth leg, rolls over. Yeah, similar to pullbacks. I did the presentation on pullbacks, right? Each leg can be an entry point. If it pulls back, then it has follow through up. You could have entered. Or your stop, enter, and let it go up. Comes back, pulls back, and it shows you signs that it's going back up. You enter, you add. After it follow through and is moving up, then you move your stop. And you just repeat the same thing. This is not rocket science. This is repeating the same common patterns over and over and over. It's easy. Once you practice them a few times, you'll see you become good at it. So 20% is a drop. The bear market definition is 20%. When you have a 20% drop, that's a bear market. So here you want to stack your concepts, right? What happened was when this came back, the last extended leg up, it hit the prior top. Now you have two tops. You have the whole number is 10,000, right? Well, that's the origin of trouble because this is where it was before. So you have prior high double tops. You have space. You're far from the 20 and the 200 moving averages. Too much time went by. So since this is a long-term play, this happened to be in months. But this all could be in the 2-minute chart or 5-minute chart because it all works in any time frame, in any price range, right? This is $10,000 here. But this could be a $10 stock. So this last leg is exhausted. The run is over. So it collapsed 20% down. And Oliver sold and made big profit. But of course, hindsight is 2020. He would have wished he never had sold that. So you had to now buy a lot more to make up for this. So I wish I could buy it at 10,000, right? If they got up to 65, I don't know what it is now. I think it was down to 32 and pulled back to 32. So this is still a great price. I would have wished he never sold it, but he was fat with profit and he took huge profits on this. But the concept is the same for stocks, Forex. When you see a big dip like this, its bottom starts to come back, starts showing you these legs, and you know what to do. We have all these concepts very powerful, right? Double tops, whole number, higher highs, space, time, exhausted legs. All these concepts are like very powerful. The odds are highly increased on your side. The game of probabilities and odds. Behavior is measurable. Legs are measurable. This is like a distance that you can measure. They all kind of equal, right? All this expands out. The distance. These are the measurements of the market. Multiple measurements. Stacker concepts is very powerful, very valuable. There are multiple concepts that come into every play, and the more that back up the play, the more powerful it is. Measurements can be added as another concept. Multiple measurements. See the distance from here to there is equal to that. This one falls in to make a square. Sometimes you only get one leg. So I'm trying to show you different scenarios. Okay. So sometimes you only get one leg. Like here. You miss this play at the open and you see this ribby. Your entry is here, you put your stop and let it go. You got one leg. Right? You want to be consistent and you want to be profitable. This helps you to be consistently when you see a ribby, you catch this one leg up. Hopefully it's the bigger leg, and then you're out. Right? Don't wait for this rollover, gibbies and all this. You're out here once the signal hits you, the whole numbers, and it's done. Done going up, it rolls over. You can short it. You can stop and reverse. You have gibbies, and then it comes back down, and you're out. So basically, you have this uptrend, and in the uptrend, you're going to have a low, then a high, then a higher low, then a higher high, higher lows, higher highs. That's how it works on the uptrend. On the downtrend, you're going to have a high, but then it's going to a new low. Then it goes up to a lower high, and then lower lows, and then lower highs. So the third way things move is sideways. So you could be in this channel where it just goes back and forth. Sometimes you can catch these plays in the channel going back and forth. If you're scalping, you're in and out quick enough. But these trends are a little longer. Sometimes you have multiple legs, right? You short it at the open. Bam. You see a nice bullish bar. So you jump in there and it goes down and then turns around and comes back up on you. You're out. You can go long. You start going long here. You see the ribby and another ribby, then a pullback, and a ribby. So I taught you guys about ribbies, and I taught you guys about pullbacks, right? This is a hang glide. This is not a violent big bar down. This is a nice little pullback to the 8, and then rides the 8 train back up, right through the prior day's close. And you can short it again, right? So if you go long, then you can have a couple legs. Right? This would be one leg shorting, and one leg up, ribby, another leg. You combine those. Oops. We got these trends like I just mentioned. You have the low, higher highs, higher low, higher high, higher low, higher high. And the sideways goes back in this channel. And then the downtrend. You have a high and then low. Lower high, then lower high. And then low. Each one of those are legs. This was one of my trades, AMD. So I missed the first leg. I was late to it. I didn't see it. I caught the ribby. When I saw that ribby, I was, oh, that's powerful. Let me jump in there. Even a little late here, but I was riding the A train up. And then I let it ride. These topping tails were telling me signals it's time to get out. But I held on this little pullback to the 8 and kept going. Then I got out. Because then it pulled back again and I got all out. I had a nice run on it. Got one leg here. This one leg here was very consistent, very profitable. So that was a nice run up. Right after the ribby. Nice extended leg, the second one. What happens on one side happens on the other side. You got to know your ribbies, your pullbacks. Okay. Legs are profitable. They will help you to increase your accuracy and your profits. And so legs are another tool for your toolbox here. I give you guys tools like ribbies and gibbies and bears and bulls 180s and pullbacks, legs. So focus on building your skills and not so much your P&L, especially at the beginning. Your P&L is not going to show your skill advancement. Remember, it took me a long time to get out of that. So used to looking at the P&L. The N. Okay. So we're doing in time. 10. All right, let me go through something real quick and then we'll call it quits. All right. So we have this morning, take 2, right? Goes back, gives you a bottom and tail, and then a nice leg up. Gives you a ribby, then another nice leg up. Pulls back, gibby, pulls back, 2 legs there, and then it goes back up. Nice leg up, ribby, another nice leg up. So you see all these legs, you would have shorted that, but it wasn't a good short. But this was 1 leg, 2 legs, 3, 4, 5, 6, right in there. Let's see, this one is similar. Pulls back as you have bottoming tail, right? Off the 108 whole number. Goes back up, nice leg up. This leg pulls back, nice pullback. So another whole number. That was a $2 run from 108 to 10. Another leg up, right? Breaks through the prior day's close, 200 moving average. Right, little break there and continues up. Nice leg up there. Pulls back, another leg pulls back all the way 200 moving average, and then continues up the A train. Go a little faster. Gaps up, nice bottoming tails, goes sideways, then that gives you a nice leg right up the A train. Another break here, another, like a sideways pullback break, right up the A train. Another leg to a ribby, gives you a nice ribby up here. This is now becoming the exhausted area. This is the origin, the igniting area and the exhausted area, right? Gives you a ribby on the top, so you may not want to add up here. But what happens on one side happens on the other side, you see. So you know your signal to get out is up in this area. Goes back to the A. You might want to get out there. Let's see, this one pulls back in the morning to the 200 moving average and then takes off. Gives you a nice ribby, a leg, another ribby, leg, goes back gibby, goes back, nice little legs there. I'm going to skip all of that because on this upward trend here, you have a ribby, another leg, a ribby, ribby, pull back, nice leg. The last leg is extended here. Well, it gives you another pullback with another small little leg, but this would have been a nice extended leg here. MasterCard pulls back to 200 moving area of the zone. 200 moving average is a zone. Prior days close, and then it takes off up the 8 train. Gives you like a big gibby and continues up real nice. Extended leg. Look at that leg. It's nice, long, extended. 2 topping toes. I probably would have been all out right there. Done. Those flags right there are waving at me saying, I'm rolling over. Time to get out if you're long. That's what it's saying to me right there. Okay, I'll get out. Take my profits and run. I played this one this morning. I made over $5 on this trade today. This is a great gapped up. I was in after these bars here. It's hard to see without the tails, right? A neutral bar, topping tail. But if you eliminate the tails, you see it has follow through. I went all the way up. I think I was in at 102 and out at 107. Gives me a pull back to the 8. I rode that. Got out at 107. I was actually out early. Could have kept going. But I was fat with profits. So, a great trade. This one gaps down. A bear elephant bar gives you a gibby. And then another. So what happened on this side happens on that side. And this gibby gives you a bottom and tail and turns around and comes up. You have 2 legs there. Another leg up here. All right, let me do the last one and we're done. Apple. All right. Gaps down. Gives you 2 bottoming tails. I remember Oliver mentioning it this morning. He goes, 2 bottoming tails on an apple. And I looked at it and I saw the follow through and I'm like, Right. And then it gives you a 180 and I got in with this bull 180. I was in. I let it ride up. Went sideways. 200 moving average. I forgot where I got out. Somewhere around here. I didn't ride the whole thing, but I caught this leg of it. I got 1 leg of it. So just getting 1 leg can make you consistent and profitable. That's your goal, to be consistent and profitable. So build your skills. Become a master trader is your big overall plan. Is to become a master trader. That's your big goal on top of them. But there's lots of little goals on the way up, right? To build your skills to become consistently profitable. Be consistent and then to be profitable. All right. So I'll leave it at that because I think time is running out on us. It went kind of long. I know it gets to be too much sometimes.
Hey, good job.
All right. You're welcome,
All right.
Paola. Thank you. Thank you,
Yeah.
Jan.
Thank you, Tony. Thank you, Paula, for your patience today. And everybody else who's still with us here. I hope we had a good session here. Thank you, Tyler. And we'll see each other on Wednesday at 12 noon, okay? And that will be a 2-hour session. We have a limited session and for 2 hours, so it cannot get out of control as it did today, okay? Don't worry about that. See you all on Wednesday noon. Bye-bye.